Oh. So boom, yo, what is up for everyone watching this on the YouTube replay? The market is not happy today, but I have bought the dip. In a minute here, I'll show you all the stocks that I've bought in. But let me give you a quick portfolio update. Our main dividend only account, this is our Robinhood portfolio, where every stock in here pays a dividend, obviously, is not doing so well. We're down 1.4%. If we go look at the S&P, that's down 1.3, NASDAQ's down 1.7, mainly led by NVIDIA. NVIDIA's down 4, Tesla down 6, Robinhood 7, SoFi 10. So a lot of the high beta, a lot of the high PE stocks are really falling today. But I have bought the dip. I made a lot of changes to my Roth IRA. I can't wait to share this with you. So yeah, here's my total percent change on every stock. McDonald's took over my Constellation Energy position today. But anyway, yeah, that's our main portfolio. Hey, what up, Looney? What up? Yeah, today's not looking so good, but luckily I bought the dip today. Let me share with you a few things. I've made quite a bit of changes to my Roth IRA. I've bought in ticker symbol HCA, possibly one of my new favorite stocks of all time that I'm gonna never sell. I bought one share of Iron Mountain, bought some Iron Mountain. I bought like a couple of shares of Core Medics, and I bought a bunch more of Webull stock today, ticker symbol Bull. So yeah, we're down 4% on them. Here's my total percent change on every stock, so it's kind of a mixed bag in here. But yeah, I'll go into more details on HCA in a little bit here because I promise you, you won't believe how good their numbers are. They've bought back 10% of the company just this past year. They have a dividend, extremely low payout ratio. Like, okay, so here's our Webull portfolio. This is known as our risk on account. We are down 3.35% on the day. Here's our all-time. I try and be fully transparent. I'll share with you my total open profit and loss. We're only up 16% all time in here, so definitely underperformed. But here's what's really moving our portfolio today. Yeah, AMD's down 2, SoFi's down 9.5, Robinhood's down 7, Dave is down 12. What's the forward PE on this company now? It's got to be like a 17 or a 17.9. So yeah, Dave's cheap. Disney fell today. Disney's down 10%. Reddit's down. So like everything's down in here. Or I guess we have a few stocks that are green. What's green on the day? Looks like our defensive names: Progressive Corp, Calmaine, the chicken egg stock, and TAP, the drink company. So more like the food stocks are green. Yeah, I think McDonald's was green as well. Check this out real quick. We got to go over back to our main dividend account. Yeah, McDonald's is green in no way, or I guess, but Meta is slightly green. But yeah, McDonald's is our biggest winner. But here's what's crazy: if we go to our Moomoo portfolio, we're down basically, or right before we went, we were down $1,000 on the day, so we're down $950. Drop a like on the stream for me. But yeah, we're down $1,000 in this portfolio, mainly led by Comfort Systems. But they have just had such a monstrous rally that I'm not concerned at all about that. Oh, and we bought another share of Amphenol stock today. So yeah, this is a stock, and I didn't feel great about it. Again, smart investors, I feel like they really focus on their quantity of shares. Again, the person, before today I had 24 shares. The person with 25 shares is beating me, even if they're down on their position and I'm up. So quantity of shares is really what you want to focus on. And I decided to buy another share of Amphenol Group, ticker symbol APH, just because I'm so bullish on this name. So yeah, we made them 25 shares. Oh man, I have a crazy update about Coca-Cola Consolidated. You won't believe this. This stock literally on this day announced they bought back 20% of all the shares, and then the stock ever since has just been straight up. Even though today's super red, super bearish, this stock is at a crazy new all-time high. So I guess that's good news in our buy never sell portfolio. Hey, what up, Avi? Yo, let's look at ARM real quick. Yeah, I think Eli Lilly. Yeah, we'll check out Eli Lilly as well. If we go to the NVIDIA portfolio right here, thanks said I'm getting so cooked today. What up, thanks? Yeah, me too, man. I'm down like near $2,000. Doesn't feel good. But yeah, I did buy the dip today, though. I bought like $500 of the dip today. So anyway, yeah, if we go to the NVIDIA portfolio, NVIDIA's legit so big that they own some individual stocks. They own CoreWeave, APLD, and then their third largest holding, or 6% of their portfolio, is an ARM. I am absolutely looking to buy the dip on ARM. This is it's really a royalty company. If we go to their gross margins, that explains they legit have a 97% gross margin. Takes nothing to run the company. Then they just print, a couple $100 million in net income every quarter. But yeah, check this out. It used to like break it down for us. Yeah, look at this. So 60% of all their revenue comes from their royalty revenue, and then their other 41% comes from their also super high margin licensing revenue. So Yeah, 42% of the revenue comes from the US. I'd love to own this company. The valuation is still a little high, even after this 5% dip. But this is one of the companies that it's like Axon. Like, I really want to own them. So, yeah. If you plan to never sell them, I would do that. Okay, so let's look at Eli Lilly right here. This is one of the weight loss prescription companies. One of the best, really good news around them specifically. They have this company called Zepbound, and Zepbound is getting added to Medicare and Medicaid for 150 a month. Eli Lilly drops CVS Health. Uh, okay, let's go check out their numbers. Like, you won't believe this, and it's not just their weight loss prescription, but that's something that's led to a lot of their growth. But check this out right here. Here's what here are their revenue streams. Their largest prescription, Mounjaro. I mean, just look at these year-over-year comps. It's up 100. It's a triple digit every quarter. I can't believe it. So this one just hits a new record every year, every quarter. They also just created Zepbound, which again is their weight loss prescription. Created this in 2023, was 100 mil. Now it's legit 2.3 bill of revenue at a record of 4x year over year. And then they also have all these other little ones that are like Trulicity, whatever that is. Well, that one's actually down 24% year over year. But Jardiance is up 50% year over year. So anywho, they just print money, beating on expectations every quarter, printing money. So yeah, I do love Eli Lilly. What app you use? Yeah, hey Valerie, what's up? Yo, this is actually a brokerage right here where you buy stocks on. It's in the link tree in my bio, that very first link there. Yeah, if you want to buy stocks today, I feel like it's a great day to buy stocks. Yeah, I do. So if you look at the top and you get the instant buying power. So if you deposit $100, you're able to like instantly. Okay, so let's see here. Coca-Cola Consolidated. That's like my only stock that's green on the day. They're at a new all-time high. We're now 44% on this company. It's like the defensive names are doing good today. Like McDonald's, for example. If you go to this portfolio, McDonald's is like our only stock that's green. Yeah, Google is down. We've made some major changes to my Roth IRA for everyone who just got in here. We basically started our Roth IRA a year ago, but we bought some bull stock. This stock's at an all-time low today, pretty much, and not financial advice. I'd recommend nibbling on that one. I just love the business there. I'm a Webull user. I have the Webull brokerage right here, and they just added, here's my kind of bull cases for bull. That's their ticker symbol. Here's my bull cases for bull stock. That is this brokerage right here, publicly traded. I've used them for 4+ years at this point, but they just added for the first time ever this prediction market stuff. I'm not going to do any of this stuff. Maybe I will one day, but I just, it's too risky for me right now. But they have the prediction market stuff. And if you notice on crypto, it says new. They just added crypto back to the platform. So whenever you go and buy or sell a stock on a brokerage, they make a penny or less on that transaction. But whenever you go do this prediction market stuff in crypto, that's where they make a juice of a transaction fee. And that's what Robinhood has been doing. Robinhood stock is at like an all-time high because of it. Well, not today. Robinhood stock is down bad, but that's kind of my thesis behind them. Hey, what up? Someone said, Vicky said, Nvidia Semiconductor. Oh, I actually don't like this stock. This is the company that's propped up by Nvidia. If we just judge this company off their own numbers, like this company, like if it weren't for this Nvidia partnership, they legit would be bankrupt. They'd be at zero. Like if we judge this company for their financials, we could see why they were at all-time lows before the Nvidia partnership. The revenue is down bad. The sales, the lifeblood of the company, the revenue is down 53% year over year. So the sales are down 53, and they're losing 20 to 50 mil a quarter. So it's just, and the analysts are expecting the revenue to fall down to 7 mil, 8 mil. So it's just not one. Aside from maybe a momentum swing trade, nothing's really blowing me away there in terms of fundamentals. Jacob said, can you check ONDS? Yeah, that's another really small kind of startup almost, but their stuff is really grown past the analyst expectations. They sell like this LiDAR or autonomous system software stuff, but check out how, if we go to the revenue year over year, it went from 900K to 6 million. That was, after it used to be 5 to 6 mil, then it fell to 600K, but now it's back. And the analysts are bullish as well. Analysts are expecting 10 million of revenue in 2 quarters. If you kind of annualize that, that's 40 million of revenue a year, and it's probably expected to continue to growing. So we just want to see the growth continue. It's still tough to really buy this one with meaningful money because, again, $2 billion company, like couple million of revenue a quarter. They're only losing 10 mil a quarter. So they just fortified their balance sheet. Look at that. Their liabilities went down and their assets went up. I'm assuming they diluted you by issuing shares. Here's how you tell. Go to the cash and financing activities. So yeah, they did dilute you by 50 mil and 80 mil. So it doesn't matter. But Interesting. Probably a little swing trade there. Whoa, stop loss madness today. What up, Brian? Good to see you, homie. I don't know. I really don't think there's any specific news. I think it's just momentum today. Ooh, someone said SoFi or UPS. You know what? Let's look at SoFi right here. Sorry if I don't get to all the stocks here. I saw HIMS. Hey, remind me to get to HIMS as well. I want to get to that one. What up, Zach? Uh, Kratos, that's a cool drone government software play mainly. Yeah, their drone business isn't doing too well, but their government. Let's look at Kratos too. I want to get to all these names. Here's SoFi. I am a SoFi shareholder. They're down 10%. Let's see this. Here's my. Yeah, this dude hit the like on the stream for me. We're down bad today, so I'm feeling your pain with you at this or in all my portfolios. But Disney's down 10, Dave 12, and then there's SoFi down 10% as well. We own like 24 shares of them. I still regret every share I've ever sold to them. But here's why SoFi, obviously before today, but here's why SoFi really deserves this momentum and this great rally that they've had. The growth just has really beaten analyst expectations. If we go to their financial services business right here, ooh, this has Q3, so this is updated. I don't actually know. So yeah, wow, at a new record. You can't make up this growth rate. It's up 80% after it grew 101, after 222, after 264. Like the revenue just hits a new record every year, every quarter over there. How about their technology platform? That's up double digits to a record as well. How about lending? Also had a new record up 25%. So I really just think SoFi, people are really taking them serious. They're beating on what analysts are expecting every quarter. That's the orange line. They beat on revenue every quarter. They beat on EPS every quarter and on EBITDA. And that's why SoFi deserves this really crazy momentum. They're making 100 mil plus in net income every quarter. You know, that's after they pay taxes of. So anyway, SoFi's a growth beast. I do own them. I'm totally biased, but they're a good just growth company to never sell. They might still even be a little valued even after their 10% drop today. So what app is this? Yeah, hey, by the way, what up, Kaz? I'm not sure what app you were talking about there. These are all brokerages where you buy stocks on. You know, they all ask for a bunch of information and they all send you a tax form at the end of the year. Just it's a filled out 1099 tax form. Out of all the brokerages, by the way, all these brokerages, all these apps are all in the link tree in my bio. They're all affiliate links too, full disclosure. So if you go and like deposit $100, we'll both get some free stocks. But this is my favorite brokerage right here. Very first link in the link tree in my bio. It's called Moomoo. Yeah, it's free, costs nothing, no commissions. It has so many cool tools, and that's why I'm using. Okay, let's see here. Oh yeah, hey, here's what I bought today real quick. Hey, what up, the winter? Greetings, what up, dude? So I actually did make some changes, a lot of changes in my Roth IRA. Hey, Grug, what up, homie? Thanks for all the gifts there. I appreciate that. But yeah, I bought 4 shares of, well, this was yesterday. I bought 4 shares of HCA Healthcare. But today, though, I bought 1 share of Iron Mountain for $100, like 8 shares of Core Medics. I bought 10 shares of Webull in that portfolio. And in this account, we bought a share of Amphenol stock. You know, again, I didn't feel great about buying Amphenol stock, even though it did fall 4%, but it's not that much off all-time highs. But again, smart investors focus on their quantity of shares. So I decided it lowered, like I used to be up before the transaction, I was up 120%, but after I bought the share, I'm only up 109 because it makes your cost basis go up. Again, it never feels good doing that, but it doesn't matter. That your quantity of shares is going up and you're already further ahead. Okay. Oh yeah, let's get to what was it? KTOS Kratos right here. It's a cool company. I'd love to own them, but the valuation is still like reasonably, it's like a $50. Well, let's go look at their numbers because they have been beating on expectations like crazy. They were able to negotiate with the government higher prices for their government software. So if we go to their Kratos Government Solutions software revenue, it's up 23% at 29, but it just really beat the analyst expectations. Check that out. That's the orange line there. They expected 322. They did 350. Last quarter was the biggest beat. Like last quarter was shocking. Like that's where I've learned about this when that's how they beat so much. But they're also beating on EPS expectations. Again, they barely make any net income. They make net income every quarter, but less than 10 mil a quarter. It's close to this quarter. But yeah, low single digit margins. But that can improve, and it's beating on expectations. So anyway, very cool growth company, government play. Let's see their drone business, their unmanned systems. This is their drone revenue. Hey, actually, it's good. That's up 35%. That might actually be a record, 87 millisales. That might be like the second or third best quarter they've ever had. So, hey, not too shabby. And they make net income every quarter. I do like that one. I do like them. Hey, what up, Elbert? How's it going? And good time. What up, y'all? I hope you're having a great day. Government opened up today. I don't know officially, but I'm pretty sure something like that. So, oh yeah, hymns. Hey, yeah, trying to spam there. Hey, Catherine, what up? We'll check out some of these other names too. So here's HIMS right here. Yikes, they're down 7% on the day. Let's see, is there any news down here? Weekly news. Novo Nordisk partners with Hims and Hers for Wegovy distribution. That's cool. Yeah, so on their actual, they just reported earnings less than a week ago, and they had some good like subscriber numbers. Let me show you kind of the AI takeaway here. Revenue increased 50% year over year. So that's why I think Hims isn't a meme stock like most people think. Like they have real growth. Revenue's up 50%. And so check this out. A 21% growth in subscribers to 2.47 million subscribers. So that's pretty cool. Let's go look at their actual numbers down here though. So revenue's up 50% year over year. Their profits though did fall to just 11 million or negative 50% year over year. So their margins got squeezed again. They used to sell a weight loss prescription for like $500 a month. Now it's now being renegotiated to sell at like $200, like way lower. So they're making way less margin here after the GLP-1 stuff got out of shortage and they couldn't sell it. And then they partnered with Novo Nordisk and now they no longer sell Ozempic, but now they're partnering with Novo Nordisk to sell Wegovy, but not Ozempic. It's like they've gone through so much. So it's still certainly expensive on a PE ratio, PE basis. I wonder what the forward PE on them though is. We're just wondering about those margins. That's why analysts are so scared right now, the margins. Hey, Name said what app you using? Yeah, hey, by the way, if you want to get this app I'm on, it's in the link tree in my bio, that very first link there. So is AZ in a buy? Let's check it out. So AstraZeneca, hey, this is another one of those pharmaceutical healthcare companies. And this brokerage is telling me that there is what is this right here? A bullish continuation triangle and the rise probability is an 84% chance apparently. But yeah, hey, they're pretty much at an all-time high. Let's go look at their earnings. I am curious. I think this is an oncology play. I don't remember. Let's see. Or yeah, oncology revenue grew 20% driven by key products like Enhertu, respiratory and immunity products grew 15% year over year. So let's check out their numbers. And so yeah, check that out. That's what the analysts expected, 14.7, a big beat on revenue, slight miss on EPS, but a big beat on EBITDA. So they probably had just had a little one-time adjustment. Yeah, these are great numbers. They're legit making, and this is after tax profits. Yeah, that's after they paid $800 million in taxes. Probably some of that, again, they had a little one-time adjustment. Their EPS was probably higher. But this is real. They're making with these growth rates, like that's insane. They're making $2 to $3 billion in net income a quarter, and you get a dividend, a 1.7% dividend. Let's go see how much it cost. So they made $2.5 billion of after-tax net income this quarter, and the dividend only cost. So you got to average it out there. So their dividend only cost $1.5 billion a quarter. So yeah, probably right. Yeah, so that's right, around a 60% payout ratio. But they're cool. That was a big. Or good numbers. Hey, what up, Adrian? Blood in the market for like 2 weeks. Yeah, Adrian. Yo, good time to buy the dip. Hey, Jello. Yo, shout out to Jello for the gift there. I really appreciate that. And Christian, yo, thanks for the roses. I appreciate that. And yo, Grug, Grug. Did you have a stock you want me to look at? I don't know if you said one. Thanks again for all those roses too. Okay. So yeah, honestly, the healthcare stocks are like in a nice defensive area right now. With tech kind of going down, it's hard to buy a lot of tech. It seems overvalued. Healthcare certainly seems attractive. And I actually just bought a big healthcare play. Someone said Novo Nordisk. Yeah, let's go look at them after this. Actually, no, we got to look at this one because I said I'd do that at the beginning of the stream for the people watching this on the replay, and I never did. If you made it to here, thank you. So let's actually cover this healthcare stock. I bought them yesterday. I bought 4 shares of them in my Roth IRA. My biggest holding in here now. I plan to legit make this an even bigger size position, but they're so high quality, I can just never catch them on an actual dip. Let's go analyze. All right, let me pull them up over here because I want to show you specifically one metric, and it's the most important metric to me, what I love about this stock. You won't believe them. They're the number 1 hospital play in the U.S., but check this out. If we go to their total common shares outstanding, as you know, stocks, there's a total amount of shares that exist. Check this out. It's down 9.7% year over year. They bought back 10% of the company, after they bought back 5% of the company, after they bought back 5%, after they bought back 10, after they bought back 0.5. So ever since 2020, the shares were 340 million in 2019 Q4. So it's 340 million shares. Now it's 229. So that, if you're wondering what do buybacks do, what is the whole benefit of that buyback thing? Whenever a company buybacks their own shares, that makes the EPS go higher, which makes the PE ratio go down. It gives you more ownership in the company, makes the cost of the dividend go down. So in short, it just forces the stock to go up. They already had great numbers. The revenue is up 9.5 and the net income grew by 28. So what does that mean in English? That means they expanded margins. Their net margin grew 17% year over year. So they're making 1.9 billion of net income this quarter. So see how much the dividend cost. The dividend only cost 160 million. Or let me show this another way. That's actually pretty cool. So there's another way you can kind of do a dividend payout ratio. The dividend cost 72 cents a quarter. So they pay you out 72 cents of net income a quarter. They're making in net income per quarter. They made $6.90 of net income per share. Highest amount of EPS ever, partially from the buybacks. Like, look at this. The net income grew by 28, but the EPS is up 42 because of the share buybacks. But look at the free cash flow per share. It was $19. They're printing free cash flow. The payout, they could literally 2 to 3x the dividend right now. They just choose not to. The yields. So anyway, I bought them pretty much at an all-time high. I didn't mind doing it. They're this kind of stock. They're just going to continue to go and go higher. I've looked at their investor presentation too. I don't want to spend too much time on them because I'm going to make a YouTube video about them. But yeah, HCA is cool. Uh-oh, someone said HCA is evil. Before investing, check out some patient stories from there. That's not good. Hey, thanks, Jello. Somebody said what happens is, yeah, hey, if you want to get this is a brokerage right here where you buy stocks on. It's a software. It's in the link tree in my bio, that very first link there. It is an affiliate link too, full disclosure. So if you go and deposit $100, we'll both get some free stocks. But cost nothing. It's free, no commissions at all. Lowest cost brokerage, I think. So let's, CoreWeave, Ford. Ford, this is a dividend play. I'll be super quick about this one. I wouldn't really recommend this to anyone. Unless you're using it for the income, or if you're 10 years away from retirement or more, you really don't want to touch this stock. You shouldn't expect this to outperform. It never has either. But this is in the year 2000, it was $25. Now it's $13. So you're mainly buying this for a dividend play because you do get a 5.5% dividend yield. But I think the tariffs have overall helped them out. I don't know, but yeah, numbers look sometimes a little choppy. But there you go. That's Ford. Not one that, yeah. Oh, let's look at CoreWeave right here. We haven't gotten to CoreWeave. We'll look at maybe the Honest Company and food too. These are cool as well. So if we go to the NVIDIA portfolio, again, NVIDIA is so big that they literally own some individual stocks, and their number one holding is in CoreWeave. Yikes. They're down 7.3%. So let's go look at their numbers. I was looking at the earnings report. They said that they didn't have enough workers, or there wasn't enough workers to fulfill and build their data centers and work them. So their future revenue that they guided got delayed, but the revenue growth is already insane. Revenue's up 133% year over year, fueled by multi-year contracts with OpenAI and Meta. I think Meta was what was the Meta deal? Let me go double check that one. So let's see, weekly news here. CoreWeave. Okay, so anyway, they just signed a $3 billion deal with Meta, I think. But even before that, this is a pure growth play. They've been so growthy. Check out the revenue. It went from 580 million to 1.3 billion. That's a record. It's never been higher than 1.3 billion, but it's 1.3 billion. Check out what analysts are expecting in 2 quarters. It's expected to be 2.4 billion. That is nuts. So the growth is in the future is going to be insane. Analysts are still expecting them to lose a bunch of net income, 50 and 60 cents. What is that? That's 60 cents is the same as 290 million for them. So they're expected to lose 300 million in net income a quarter. That's the one thing I don't love, the fact that they're a money burner. But that doesn't matter because as long as they can keep up this growth right here, this triple digit growth, I think they might still be good. So yeah, there's your CoreWeave. I wouldn't have them as a huge size position. I've given up on CoreWeave for 3 stop. Oh, hey. Yeah, CoreWeave is interesting. So here's one of my favorite stocks right here. This is Futu. Oh, we forgot to get to Novo Nordisk. Meta was with Nebius. Oh, thanks for that, Evan. What happens is, hey, what up, Nathan? Again, this is actually a brokerage where you buy stocks on. It's called Moomoo. It's in the link tree in my bio. It's that very first link there. Yeah, it's a software where, they ask for a bunch of information and stuff. But anyway, check out Futu right here. Actually, this software I'm on, if you're wondering, this is a brokerage. This brokerage right here, this app that I'm literally on right now is publicly traded, and this is their stock. Ticker symbol FUTU. So again, even if this company goes bankrupt, you're still FDIC insured for 250K, but this is why I love them even more. They print money. I also own them, or I own their stock, but they made 330 million of after-tax net income this quarter. So this brokerage right here is printing money, so they're safe to keep your assets in, I think. But yeah, they make half their money from brokerage commissions, and then their other money comes from interest income, and that grew 43% year over year. This interest income, if you actually look in the middle of my screen right here, I don't have any more cash because I spent it all on Amphenol stock. I actually looked today, I bought another share of this for $140. But anyway, if you look in the middle of my screen, they give you a 3.6% APY on your idle cash. They make a little APY on top of that and kind of pocket the difference, and it's all high margin for them. It's kind of smart. But yeah, they also pay a yearly special dividend. They trade at 24 times PE. Here's their number of users. They got 27 million users. So yeah, it's all, and they have this other income. Yeah, they just introduced crypto to the platform. It's led to triple digit growth on these numbers. So there's so much like bullish, like future, like tailwinds to their revenue streams. And here, I'll show you that. So that's actually that app right there is publicly traded. I don't own their stock on their app. I actually own it over here on this platform. It's so, you know what's so funny? I just realized, so I own Moomoo stock in my Webull portfolio. I also own Robinhood stock on my Webull portfolio. And then in my Robinhood portfolio, in my Robinhood portfolio, I own Webull stocks. So I just love the brokerage industry. Brokerages are just going to print money, I feel like, with crypto and this new prediction market stuff that people are buying. So anyway, I own Robinhood, Moomoo, and all three of these brokerages, all three of these apps, I just realized I now own, which is kind of funny. So, okay, let's keep going right here. So Futu never sells stock for me. Incredible numbers. So could you choose between Nebius and CoreWeave? I'd probably pick CoreWeave if I had to pick one between Nebius and CoreWeave, just if I had to pick one. But IREN is, Iris Energy is another one that's just like, there's so many stocks that are in this sector right now. Nebius, CoreWeave, Iris Energy, they all do like the same thing. They've owned a bunch of GPUs and they're doing server hosting. Yeah, Iris Energy's down 10%. Iris Energy just got a big deal as well, I think. Iris Energy signs $10 billion Microsoft cloud deal. Bitcoin mining industry faces challenges. So yeah, exactly. That's what you're seeing a lot right now. If you look at like Hive Digital, I think not just Hive, but Hut 8 has done this a bunch. They're converting. They used to all they do is they own a bunch of GPUs and they're converting them into server for cloud hosting, and then companies rent, like the Microsoft Cloud. Microsoft Cloud doesn't want that liability on their balance sheet, so they rent it out from Iris Energy. So the growth on Iris Energy has been nuts. Check this out. If we go to the revenue, the sales, it's revenue went from 50 mil to 240. Incredible growth, and they also are now making profits. Actually, did not this quarter. They actually they had a little funny money one-time adjustment to their net income. So that's why you always gotta look at the real adjusted numbers. But interesting, and analysts are expecting the revenue to continue to climb there. All right, let's see here. I don't know what their moat, like that's the tough part. Their moat is, I guess, their strategic partnerships, but I don't know. It's tough. Like, okay, there's so many stocks I'm missing here. I'm so sorry. Like I said, I'd get to some stocks. I don't know. Like Supermicro, I wouldn't touch Supermicro here. Margins are collapsing. I do own Supermicro though. I'm a shareholder. I want to see them do good, but I wouldn't buy Supermicro computer yet. Okay, so here's Novo Nordisk. This is the weight loss company that owns Ozempic. So if you've heard of Ozempic, Elon Musk is on it. They also own Wegovy. You heard of Wegovy? They actually just partnered with what's that called? Hims and Hers to go on their subscription platform. But anyway, the reason though, if you're wondering why is the stock tanking, I thought the weight loss prescription stuff would be booming right now. Eli Lilly's at an all-time high. Metsera just got acquired by Pfizer. But why is this one at a 13 PE versus the industry average of a 23? That's because they actually sadly lose their exclusivity for Ozempic in a couple years. Novo Nordisk was actually bidding to buy what's that called? Metsera, but Pfizer outbidded them. And why was Novo Nordisk trying to buy a weight loss prescription? That's because they lose their exclusivity here, so they needed a new formula. Also, this is a pure weight loss play. Their diabetes and obesity care products are 93% of all their revenue. Their margins did just fall. Like if we go to the revenue grew by 10. So the sales are up by 10, but the net income fell by 22. And that wasn't some one-time adjustment either. Like the real operating profits, the core business like really fell by 25, or the profits, I mean. So that just means the margin, like the net margin, the net margin went from 38 to 26. So that was rough, but you get a nice yield here, 3.6% dividend, but they're missing, again, the PE multiple, your PE ratio will collapse if your future growth expectations go down, and the future growth expectations are going down, and they also missed on the revenue number. Check that out. Analysts expected this quarter 12 billion. They only reported 11.8. So we're already starting to see that slow down. So honestly, but that might all be priced into this stock. That's the thing. Like the risk to reward probably looks pretty decent on them. I wouldn't have it as a meaningful size position, but they're certainly interesting. So Super Microcomputer, wow, we're only up 35% on them. Wow, we haven't done so, wow, they're falling faster than I thought. So actually, I thought they'd fall to here. I don't know if I'd buy the dip on this one. Here's the tough thing about Supermicro. Again, they just sell a commodity, server installations. Dell is doing it now. So they have no moat really. So if we go to the revenue, this is the revenue's down 15 and the net income is down by 60. That's the tough part. What does that mean when the net income's down way more than the sales? Well, that means the margins, your net margins collapsing. It used to have a mid to high single digit net margin, 8 to 10, but now it's 2, 3, like that's rough. I mean, they're still making 100, 200 mil a quarter, but that's way off what the analysts thought. So that's what scares me about Supermicro. There is some good news though, like OpenAI, Oracle, they just ordered a bunch of AMD and NVIDIA chips and the Datavolt deal. So is Meta a buy the dip at this point? Absolutely. So what we're actually seeing is, here's what I just saw, which is pretty fascinating. So you guys know OpenAI or ChatGPT. They used to just organically grow so much that they never had to do advertising. They're starting to, like the CFO of OpenAI was starting to see a user slowdown, he said. And now there is ads of OpenAI and ChatGPT on Meta and Facebook. So I think one way, like to fix your slow growth problem, you just buy ads, and Meta's almost a way to bet on that. So I love Meta stock. Absolutely a buy the dip stock. Hey, Chris, what do you mean? Yeah, hey, if you want to get this app, it's in the link tree in my bio, that very first link there. So yeah, or maybe an app loving stock. So here's Meta right here. So absolutely buy the dip on them. If you plan to never sell, for sure. I do actually own Meta here in my portfolio as well. So I might be biased, but yeah, we're up 15%, not crazy. We're up we got 5 shares. I think Michael Burry just took a big short into this company. Meta announces $1 billion data center project. Meta signs here it is, $3 billion AI infrastructure deal with Nebius. So that was from earlier. But yeah, here, Michael Burry claims Meta inflates earnings through depreciation practices. So what he's really talking about there is whenever you buy a Blackwell chip, or you just buy a chip, in 10 years, the value of it is literally going to be zero, or maybe eventually it just doesn't work. So you get to depreciate it, and they're adding that depreciation to their net income. It's which is he's right, but not yet. It's not a big deal at all yet. But check that. Well, it is a big deal a little bit, because one thing analysts aren't too happy with about Meta is their heavy CapEx spending. They got punished in the past for spending a bunch of money on the metaverse. Well, now the new thing they can spend money on. Oh, first off, they can afford this. They have no net debt, and they make 20 bill of after-tax net income a quarter. So I'm honestly a fan of this right now. I don't care what happens, but they're plowing money into the AI. I'm a big fan of the Meta AI glasses. I've never tried them or anything, but the Meta AI glasses, the new one with the onset display, looks really cool. But yeah, they're investing legit in their cash from investing activities, 20 to 25 billion a quarter, when they used to be reasonable 6-8 billion. So they're spending legit 100 billion a year. They can just barely afford that with their cash flow. They're spending all their free cash flow on investing in the future. But that's what honestly I love, and that's what I love about Amazon as well. They invest all their money they're making into the future. They also get a small dividend. Yeah, Meta, I love their apps. Facebook, Instagram, they have WhatsApp, and they're just now introducing ads to WhatsApp. They have Threads. Threads has the same amount of daily active users as X. Pretty cool. I met the CFO of OpenAI. She's cool beans. What's in that? Really? That's really cool, Adrian. That's actually really cool. Hey, what up, Nightmare Before Christmas? No, burst the bubble. Use Weeble? Yes, I do. Let's look at AppLovin right here for sure. Oh, wait. Okay, we'll look at this one, and then we got to get to IDCC. What up, Leets? What up, Professor Pumpkin, Luke? Hope y'all having a great day. We'll look at Vive. We'll get to all these stocks here. So here's AppLovin. This is one of my favorite stocks out there. I'd love to buy them at a reasonable valuation. They're still a bit pricey, 30 times revenue. That's not nuts, But check this out. This is what I can't believe about them. If we go to the revenue is up 69%. It's 1.41 billion in revenue. Out of that 1.4 billion of revenue, 840 million of it was after tax net income. You know, this 835 million number was after paying 100 million, 150 million of taxes, or really 170 million of taxes. So this is the after, like, this is insane. They're going to be making close to $1 billion of after tax net income a quarter. The free cash flow is already over $1 billion. Like, these year-over-year growth rates are insane. Let's see if they're going to be making $1 billion in net income a quarter. Ooh, still a bit expensive. 190 bill market cap, and that's with a that's with my pretty generous forward PE there. So they're still a bit expensive here, yeah. But I'd like at this growth rate though. I mean, what if it's more than that? And it probably will be. They're an absolute monster. The SEC isn't like their ads are so good. Their ads are so good that the SEC is investigating them for ad data collecting practices. Okay, let's see. IDCC here. Yeah, that stock deserves a high PE. What app are you using to rate these? Hey, yeah, by the way, this is actually a brokerage right here where you buy stocks on. It's in the link tree in my bio, that very first link there. So let's see here. What's happening with Nebius? Yeah, Nebius is just falling because of CoreWeave, the whole Iris Energy, basically all the companies that do exactly what they're doing are also tanking. So it's kind of the whole market, not exclusive to them. But maybe let's check them out if you want later. So here's InterDigital, IDCC, a $9 billion company, phenomenal stock price. Yo, congrats if you own this one. So let's see what they do. Or the PE, even though this stock is at an all-time high, or pretty much was at an all-time high, after this insane rally, they're only trading at 23 times PE, which is price to net income. That's fair. Yeah, here's their net income right here. Yeah, these year-over-year growth rates are insane. Let's see if that must be beating expectations. So yeah, they're beating on revenue, beating on EPS. Yeah, big beat on EPS last quarter by double, and on EBITDA they beat by double on EBITDA last quarter. Like last quarter was insane apparently. So yeah, I can see why this stock is doing so well. They're deleveraging their balance sheet. Their liability ratio went from 58 to 48. I mean, that's great news. So yeah, everything there is headed in the right direction, beating on all expectations. So let's hope I can find this one. HNH. PF. Oh, so we did find it. Yeah, let's go. What's going on with MicroStrategy? Yeah, that's basically just Bitcoin. They're a Bitcoin holder. I wish they had more fundamentals than that to really analyze. Let's look at MicroStrategy after this, actually. But yeah, this is a big company, $111 billion market cap. They are, looks like a Taiwan company. So we'll convert the currency from Taiwan to USD. Foxconn Industry, FIH Mobile Limited subgroup. I'm not too sure what they do. Looks like 35% of the revenue comes from the US, then Singapore, Ireland. Let's check out the revenue though. This is incredible. And this is in USD as well. We've converted this to USD, 61 billion of revenue. And out of that 61 bill of revenue, they made not two. Yeah, what's that net margin? That's a 2% net margin, but they're still making 1 to 2 billion of after-tax net income a quarter. Yeah, that's after 300 mil of taxes. So they're certainly interesting. I wish I knew more about what they did. Oh, you get a nice yield, a 2.5% dividend yield. Maybe engages in technical solutions, cloud networking products, computer parts. Interesting. So here's MicroStrategy. Again, I wish I could give you more thoughts on this company, but this is mainly just a Bitcoin holding company, and it mainly just follows the price of Bitcoin. So if we go to their cash from investing activities, whenever a company issues debt or issues shares, this will be positive. And this is how the Ponzi scheme is crazy here. Well, and here's how it actually worked for them. They literally, and the rules are different now. One of the reasons they're also falling more is because the SEC is cracking down more on, they have to get more shareholder approval to just dilute the company by 20%. Like this again, but they literally diluted you this quarter, not by issuing debt. They did no debt. They literally issued $18 billion of shares and bought $18 billion worth of Bitcoin. And that Bitcoin is since then up like 30%. But look at that, explains why their balance sheet, the assets went from 8 billion to 73 billion, because they just dilute the life out of the shareholder every quarter and buy Bitcoin with this. So as long as Bitcoin does good, this one, I guess in theory should do good. But honestly, I'm a kind of a fan of more of just owning actual Bitcoin. Like if that's but it's certainly interesting. Okay, thoughts on Hood. What up, Lopez? Good to see you, homie. Let's look at Hood right here. Then we'll get to Vive or TKC after this. Chewy. That's an interesting one. The gold companies are posting. Yeah, actually, the gold today, like you'd think, like with how red today is, you'd think gold would be green, but gold was flat when I last looked at it. Here's Robinhood though. That is Hood stock is actually this brokerage right here, publicly traded. So I use their brokerage. I've probably given them a lot of transaction fees and stuff like that. One reason Robinhood is going crazy right now, they're making a bunch of money from this prediction market stuff, and the Robinhood users are kind of the people that really do this stuff. But whenever you go buy and sell a stock on this on a brokerage, they don't make too much money, like a fraction of a penny. But whenever you go do that prediction market stuff, or you go do crypto, that's where they make a juice of a transaction fee. Robinhood has one of the worser crypto fees, but that's why I actually like them, because they make a juice of a fee on it. But yeah, we can see their net cumulative funded accounts, the metric you want to look at. It's 26.8 million versus 24.3 million. So they have a bunch more users. They're pushing their Robinhood Gold subscription, and they're printing net income. I kid you not. This is the best part about Robinhood. First off, we can look at their sales. Revenue's up 100%. So the revenue's up 100% after it grew 36, after it grew 30. So they're on a streak of growth. But out of this 1.27 billion of revenue, they profited 556 million of after-tax net income. And that's after, let's see how much taxes they paid. That's after the 100 mil of taxes. They earned 130 million of taxes they paid. Like, it's insane. So these brokerages, that's why I love the brokerage industry. Crazy margins, 43% net margin. Nuts. So that's what justifies Robinhood stock going up. And honestly, here's another. Robinhood's still expensive. I do own Robinhood stock. Full disclosure, I regret every share I've ever sold a Robinhood. Check this out. I got 5 shares. I used to own 50. I sold, or more than that. I sold 50 at like $36. So that one's I own a lot of the fintechs. I got SoFi, I got Futu, which is Moomoo stock, and also this brokerage right here. We just looked at Robinhood stock. This one also, for the first time ever, they saw the success of Robinhood and copied them. Before today, I was like, dang, they're really copying Robinhood. I'm kind of worried. So they also just brought back crypto to the app. They brought back the stuff where they make a bunch of juicy margins. The prediction market. So I actually, on top of Robinhood stock, I actually today I bought 10 shares of Webull stock, or I can show you that down here. We've just been buying the dip November 12th, 13th. Like, we've just been buying the dip on Robinhood or Webull, because they're at an all-time low as well. It's like a cheaper version of Robinhood maybe. Anyway, I kind of ranted on at that too long. Let's keep going here. Some more stocks. I'm so behind in the chat here. Ooh, Smoke said Palantir. Please remind me to look at Palantir someone later. So let's look at TKC. And then Luke, so we'll look at Vive. I'm so behind. I feel so bad for everyone. I'll try and be quick. I only spend like 1 or 2 minutes on each stock. By the way, if you want to hit the follow button, I stream every single day. I sell nothing. I literally have no course, book, WhatsApp, Telegram. I'll never ever follow you or DM you. So please watch out for people impersonating me. But yeah, if you want to support me, best way to support me is just subscribe to my YouTube channel, hit the follow button. But yeah, here's Turkcell. YouTube channel is called Nathan Roberts, also in the link to my bio. If you miss anything, you can replay the stream. So here's Turkcell. I actually don't know what this is. The stock has not done too well. Looks like they pay a dividend. That must be a high yield, or what's the yield there? Yeah, 5% dividend yield. Look, it's saying the payout ratio is safe. Let's go investigate. So we're going to convert the currency from, I don't even know what TRY currency is. I feel like I should, like Turkish dollar. I don't know, but we'll convert that to USD. Yeah, where's the revenue come from? So Turkey, okay, let's go look at their actual numbers though. So it looks like they're now making money every quarter. So they lost money that quarter, but the past 3 quarters they've made 80 to 100 million in net income a quarter. Okay, balance sheet. Sales revenue is down 8% year over year. So it's honestly not great. But let's go check out the dividend. So they made 130 million of net income this quarter. Let's for fun see how much the dividend costs. The dividend will 100 mil a quarter. I don't know. I'd be careful with that one. Nothing's really blowing me away there. So Vive, let's do this one. Ooh, an Amazon stock. Hey, Austin said, did you have thoughts on Disney earnings? I haven't looked at Disney earnings yet. Yo, we're down bad on Disney today. We do. Yo, hit the like on the stream for me for this. Yeah. In our Webull account, Disney's down 9. Dave is down 12 today. SoFi's down 10. AMD's down. Reddit's down. So this is our risk on portfolio where we got a lot of tech stocks. Here's our open profit and loss. We're only up 16% all time. I love being fully transparent. You got any questions for me about any of my portfolios? Let me know. But here's Viva Systems. They're on my watch list. I actually do like their numbers. I'll show you what I mean here. So if we go to their revenue versus what the analysts expected, that's the orange line every quarter. Just a beat on earnings, beat on revenue. So they one-time adjustment to their EPS. They didn't actually miss on EPS on adjusted, but and a beat on EBITDA. But yeah, they're a subscription model company. I love subscription model companies. It's all reoccurring revenue, predictable. But check out how it just hits a record every year. Like there's only green. There's no red numbers. It's up 17% after it grew 19, after it grew 3, after it grew 25. So they're on a streak of growth on their subscription revenue. Let's see at their free cash flow. Yeah, dang, nearly $1 billion of free cash flow just last quarter. And in net terms of net income, they're making $200 million plus of after-tax net income a quarter. This is almost like it's a software name. Almost, I like it probably maybe more than a Salesforce. Absolute fortress balance sheet. Like this is what adds an extra cherry on top, extra margin of safety. Like takes a lot of risk off the table for them to have this fortress of a balance sheet. Legit, they have $6.4 billion of cash. And a lot of that, 4.5 billion of it is in short-term investments. So what does that mean? That in 1 to 3 week treasuries, that means they're milking interest. Let's see. They made 65 million of interest on their cash just this quarter. Just insane. So that's them. All right. So let's see. Pedro said buy ASML. Yo, ASML is definitely interesting. What app do you buy on? Yeah, hey, I would get this. This is a brokerage right here to buy stocks. It's called Moomoo. It's in the link tree in my bio, that very first link there if you want to get it. My favorite one. Best analysis tools, the Pelosi tracker, all that. So there's so many features I couldn't even say them all. Rocket Lab, crazy dip. Let's check out Rocket Lab. Yeah, this is a brokerage right here. Link tree in my bio, that very first link there. So here's Rocket Lab. We'll look at Rocket Lab, then we'll cover a PCAR, ASML. So here's Rocket Lab right here. Yeah, this is a space stock. The PE ratio has just been too high on this company. Check this out. They reported Q3 revenue of $155 million and secured 17 launch contracts, but their Neutron launch got delayed, it sounds like. Acquires Geost. I love this acquisition that they're doing. They have actually a $1.1 billion backlog. What's the market cap? $25 billion market cap, but they have $1 billion backlog, which is good. They're such in demand. But check this out. Their space systems revenue, first time ever, over $100 million in revenue, up 36% after it grew 81, after it grew 15. So I love, this is a growth company. And then they also have their launch services, also a record, up 95% year over year. So both businesses are doing very well in terms of growth. Let's see, did they beat expectations? So a slight beat on revenue, actually a big beat on the EPS losses. It probably was a one-time adjustment. It says they lost 18 million. Yeah, so they actually lost their normal 58 million. So they had a little one-time maybe tax adjustment. But yeah, they fortified their balance sheet probably from diluting you. Yeah, wow. They diluted you by 500 million. But look what that did to the balance sheet. The liabilities are the same, 940 mil, but the assets just boosted up. So that gap is only now 42%. So anyway, Rocket Lab's interesting. They might dip a little more though. So PCAR, let's check this one out. Yeah, this is PCAR. This company, it's either this one or the other one. They make those heavy trucks for waste management and what's that other company? Republic Service. Yeah, it is this one. PCAR was at the top there. Yeah. So this is the company, PCAR. Yeah, they make those really cool, high quality trucks for waste management. But yeah, the PE's fair, a 19 PE. Probably, normal for this industry. Yeah, industry average is a 23, but you get a nice yield as well, a 1.3% dividend yield. And look at the payout ratio. They only have a 15% payout ratio. They raise their dividend every single year, which is great news. But this industry is slowing a little bit. Yeah, look, trucks are 66% of the revenue. Don't think of your traditional trucks, but yeah, look at this year over year. It's down 27%. That explains why the stock has mainly been flat since a year ago, but I still love this company because they're still juicing money. Check this out. We can go to their net income. They're still making this quarter 600 mil in net income, 730 mil. So they're making still 500 to 700 mil in net income a quarter. They pay a dividend. The dividend only cost 170 mil. And since the dividend costs so little, they're also doing a little share buybacks as well. So there's a cool stock. The growth we just really want to see the growth come back. But they have such a low payout ratio, nice dividend, low valuation. Nice. Oh yeah, we did not look at Disney. Let's cover Disney. What up, Austin? So yeah, I meant to get to this one because this stock reported earnings today. RIP. Look at this. We're down $150 on Disney today. So just from them. So Disney. Let's go look at their actual numbers. Are they out yet? 2025 Q4. I think this is it. So yeah, they missed on revenue. They slight missed on EPS, and well, they beat on EBITDA. Let me actually go look at the earnings hub. I love seeing what AI has to say about this. So entertainment segment operating income declined 35% due to amortization and restructuring. That's no big deal. Experiencing segment operating income rose 13%, driven by international parks and cruise demand. Yeah, I remember seeing a headline like their CFO or whatever saying like there was crazy cruise demand right now. They bought the full rest of their stake from Hulu. Yeah, unfortunately this says Q4. This is Q3, so we don't have their most recent earnings report because they came out this morning. Some people don't love Disney because they're a bit of a slow grower, 2%, 6%, 4%, but I own them. They're an interesting one. Like they just took some stakes in, I forget the name, but recently they took like a 3% stake in some other company. Let's see. Disney Channel faces ongoing blackout on YouTube TV. Yeah, Disney ESPN expansion. Let's see. Weekly news. Okay, whatever. They own ESPN, Hulu, and Disney Plus, obviously. Do any of these critical mineral stocks worth buying? They've been slaughtered. That is interesting. Here's one that still I wouldn't trust with a lot of money. Oh, and I'm UAMY. I wouldn't trust this one with a lot of money, but this is a rare earth mineral play. They have like mines of like zeolite and some of these other things that are needed in semiconductor products. And check out this is the main reason you'd buy UAMY. The revenue this quarter was $8 million, missed the expectation, but in 2 quarters, the revenue is expected to be $40 million. And check this. Here's the other great part. Even if that growth wasn't expected, I still like this one because check this out. They made $10 million of revenue this quarter, and they made $100,000 of profit. Like they're making profits. That's the thing. Like, and whenever they lose money, they only lose $800,000, $700,000, like that. So they're fortress balance sheet, not losing much money. So that's actually why this one's kind of interesting. Again, I don't own it, wouldn't trust it with a lot of money, but that future growth expectation is certainly interesting. We were looking at on the last time on the stream. We were looking at their website and stuff. Anywho, let me not spend any more time on them. That's one I found interesting. So yeah, antimony, zeolite, silver, some gold products. So let's look at ASML right here. This is the lithography company. They're the chip making manufacturer. So hey, what up, Nathan? Hey, remind me to look at PayPal. Dude, Dillard stock did go crazy today. Man, I regret not owning them. Adobe too. So here's ASML. They reported earnings about a week ago. Let's see what happened there. They're the chip making manufacturer. Their 3 main customers are NVIDIA, Samsung, and Intel. Revenue fell short of consensus due to weaker China sales. Gross margin of 56. Net bookings totaled $5.4 billion. Nice. Let's see. So yeah, they had a slight miss on revenue. They beat on EPS and they met on EBITDA. So here's the good news. Here's the good news about this stock. They print money. I mean, they're making $2.5 to $3 billion of after-tax net income a quarter. They are a European company, so they do report a little different. So if we go to their dividend right here, they actually change their dividend every quarter, so you never know what it's going to be. $1.86, $1.84, $2, $1.50. So pretty cool. 0.74% yield, 36 PE. That's pretty fair for this industry. 34 industry average. So ASML is a nice one. I probably wouldn't buy it here at this over 1,000, but they're a great one. Super quality company. Actually, I got to skip a few stocks here. I got to get to, someone said Iron Mountain. What up? How you doing? How are you doing, man? But yeah, what's up? He said Iron Mountain stock. I bought a share of this stock today. And unfortunately, look at it right now. It's at $92. It's at $92. Well, we bought our share this morning at 96. So not financial advice, super not financial advice, but almost a lot of people, I think you should consider this one for your portfolio. If you like some dividend stocks, this is actually a REIT, a real estate investment trust. And so they have if we look, they have a 3.7% dividend yield. So you get a 3.7% dividend yield with this company. And they're actually a data center real estate investment trust. They own the leases under a lot of data centers. So they triple net lease these data centers. And here's right here. If we go to their global data center business, like the growth rates of great. It's up 33% after it grew 20. So that's great growth. And also their corporate and other business. Look at the growth rates over here as well. It's up 46 after 85% growth. But then their main business right here, their global records, like I don't know if anyone has ever work for a company where like to throw away papers, you have to go like dispose of them in some like armored truck. They do that as well. Number one provider of that. Like the IRS is their main customer for that. Actually, you won't believe this. 95% of the S&P 500 are customers, and also 95% of the Fortune 1000 companies are customers as well. So anywho, they're just a nice dividend play. They're a REIT, and I think out of all the REITs that exist out there, I've looked at all of them in every sector. From Realty Income to Simon Property Group, like that's my favorite, the most bullish REIT I've seen. Iron Mountain, IRM. And the interest rates should be good for them as well. Hey, sir, how you been? CRMD did a thing the other day. How did that go? Applesauce, what up, homie? Let's actually check out CRMD. So they actually reported earnings as well. I'll give you a quick update on this stock. If we head over here to our Roth IRA, I'd love introducing y'all to stocks you've never heard of before. Like, I don't want to just cover Apple. Actually, I'd love to cover Apple and the Mag 7 stocks, but I want to try and introduce you to stocks you've probably never heard of before. This is one that I decided to take a bet on. I am slightly down on my position. This is CorMedix, CRMD. I'm so bullish, not financial advice. I think this stock is a 3X, or potentially more, but as much as I'm bullish on this stock, again, take nothing as this is financial advice, as much as I'm bullish on this stock, I only have $600 in this name. So if you find this stock impressive and you're going to, don't keep a meaningful amount of money in this one. The shorts are attacking this one. How much are the shares being shorted? So check this out. 21% of all the shares are being shorted. So the shorts are taking, but here's what I love. So again, if we look at how much the whole entire company is worth, the market cap, the whole entire company is worth 910 million. So remember that number. The whole company is worth 910 mil. Oh wait, they just acquired Malenta, so that actually changes things. But they actually had 190 million of cash and no debt before today. But today, if you're wondering, if we go look, this is nuts. This is nuts. Literally, if we zoom out, 2020, they had zero sales exactly a year ago, basically no sales. Now the revenue is 104 million. And out of that, they made 50 million of profits. So if we go to their net margin, or actually we mainly just want to go to their gross margin right here. I haven't been more bullish on, I haven't been this bullish on CorMedix ever. Like, I love this company. The expectations, like the EPS is expected to continue to climb up to 70 cents. So here's a company that's going to be making 50 mil of net income a quarter. So the PE is a 5. They trade at 5 or actually probably like 10 times, but just a really cheap company. Hey, what up, Pedro? Hey, nice. You made 500 euros on that one. Hey, what up, ATO blank son? How's it going, man? And that man, he said PENMF stock. Hopefully I can find that one. It sounds like a weird ticker symbol. Unfortunately, I can't view that one on this brokerage right here. I am down on CorMedix. I'm in at 1250. Hey, that's in the long run, like, you should just never sell that one. All right, so, what's your best advice for someone who wants to start but has no knowledge? Well, hey, it's okay to I would you want to get into the market, I would get a brokerage. I like this one right here. Link tree in my bio, the very first link there. It's free, costs nothing, no commissions or anything. And then this is fairly simple. You just buy the S&P 500 as the backbone of your portfolio. This asset right here, and it's done this since history. It just returns on average 7 to 10% a year. So on average, you get like 7 to 8% returns a year with this ETF. And not only most retail investors can't beat the S&P 500, but most hedge funds can't outperform the S&P 500 as well. So and it's so simple. People overcomplicate it, thinking I can't really have crazy results just buying the S&P 500 and doing nothing. But that's the secret. You can. And so I'd have that as the backbone of your portfolio. Then maybe play around with some individual names that you know and love. Buy Apple stock, maybe Microsoft, Amazon. I own most of those. I own Meta, Google, McDonald's. Buy the companies. Stay away from the meme stocks, the kind of junk ones. Buy stocks you know and love. Okay, my bad. I've missed out on so many stocks here. Let's check out Adobe right here. And Palantir Smoke. Thank you for still being here. We got to get to Palantir after this. So here's Adobe. This is one of the software names really being hurt by the AI thesis. Again, there's a lot of competition, Figma. Here's a funny story. They tried to buy Figma. It got US approval, but then the EU regulators didn't approve the Figma acquisition. Now Figma's IPO'd. But anyway, this app is telling me that there is a bearish continuation triangle, whatever that is. Anyway, the numbers are good on this company, but it's the future growth, the future expectations that are hurting this name. The AI thesis, like in 10 years from now, will we need Photoshop as much? Like I know someone who just made an incredible logo in ChatGPT that doesn't look like AI generated. Like it would have taken me a long time to recreate. But here's what I'm a believer of. I don't think that's fully the case. It's certainly going to hurt it to some extent, but I'm a believer that humans are always going to need the final touch on art. Okay, TikTok saying I'm AFK. I got to fill out a caption. All right, we filled out the captcha. Okay, we're back. Uh-oh. Did I just end the stream? Oh my goodness, I had a panic attack for a second there. The chat went away. Okay. Hello. Dude, why does TikTok make me fill out a captcha? Anyway, here's Adobe right here. They're trading at 20 times PE. That's probably a fair multiple for Adobe with the AI thesis. But here's why I love Adobe and why I'd actually nibble on this one. I wouldn't have it. Here's the thing. I'd nibble on this company here. I wouldn't have it as a major size position. But check this out. They're still printing money, 1.7, 1.8 billion of net income a quarter. What is Adobe doing with all that net income? Because they don't pay a dividend. Again, they try to do acquisitions. They have so much cash already on hand. So what are they doing with all this cash? They're returning it to you via share buybacks. Look at the top. They spend $2 to $3 billion a quarter just solely buying back their own shares. Here's what that does for you as a shareholder. If you go to the net income grew by 5. But the net income per share grew by 11. Remember, the EPS growth rate and the net income growth rate should always be the exact same. The only thing that changes it is the share part of the ratio. So, anywho, the buybacks are really helping out Adobe, but I'd nibble on that one. The AI thesis is real. Someone said Cormetics is the same price it was 15 years ago. Exactly, yeah. But they just now finally have revenue. Same with like some other stocks. Like they weren't a justifiable buy before today, before the revenue that they started making. Yeah, Meta's very cheap. Hey, Sharp, I appreciate you, man. Yeah, if anyone wants to hit the follow button, we stream every single day. I sell nothing, like literally nothing. I have no course book, WhatsApp. I'll never follow you, DM you. Yeah, watch out for people impersonating me. Someone said, was that you that DM'd me? No, I'll never, not in a mean way, but you know what I mean? I'll never follow you, DM you, nothing like that. I'll never message you asking for stuff. All right. Okay, so let's get to Nebius right here. That one's actually in the NVIDIA portfolio. NVIDIA, they own some individual companies. They own CoreWeave, APLD, and they also own Nebius. This one had a big deal with Microsoft. Let's see if we can find that. It was older news, but they signed a huge cloud deal. Nebius launched its first AI cloud platform in UK. So anyway, let's go look at their earnings report. I forget what exactly happened here. So revenue growth was fueled by strategic agreements with Meta and Microsoft. Yep. And let me just go look at their actual numbers. So if we go down here to the revenue, what I've loved about Nebius, again, just because NVIDIA owns a stock doesn't mean you should always go do your own research on it. What I've loved about Nebius is how growthy they are. Like the revenue went from 30 mil to 146 million year over year, a 4x increase. They're still losing 100 mil in net income a quarter, but check out did they just like buy a company or something? Or wow, they spent $1 billion on something, but balance sheet looks good. And check out the analyst expectations. So the revenue is going to go from 55 mil to 300 million in 2 quarters. So there's a lot of future growth expected. Microsoft is hosting some of their Azure cloud on Nebius's servers. So that Microsoft deal was the big mover for them, but they're falling just because the whole market is. You look at CoreWeave or like Iris Energy. They're both main competitors are also tanking. Wow, look at Coca-Cola Consolidated. This is I can't believe it, new all-time high. The defensive names are really showing their strength today. If we go to our Robinhood portfolio, look at this. The only stock that's green, hit the like button for me. We're down bad today. Well, the only stock that's green is McDonald's in here. Yeah, check this out. We're down 1.5% year to date. How are we doing year to date? Yeah, we're only up 11% year to date now. But yeah, we're down $400 in that. What about the Roth IRA? Yeah, we're down $100 in the Roth IRA as well. And then our Moomoo portfolio, we're down $990 if you look in the top right. And then in our Webull account, I just like being fully transparent. I feel like go to some other streams sometimes. No one ever shares their portfolio, their total open profit and loss. Like we're down 3.5%. We're only up 16% all the time in here. Like, anyway, let's see here. Next stock. Des said Newsmax, NMAX. Let's check this one out. Pensaluna Energy. Hey, that man, can you give me the ticker symbol for that? Oh, wait, we tried to find it. I don't think I can view that one. Which app is this, please? Or hey, Sohel, you texted that a minute ago. I'm not sure which brokerage you're talking about. All the brokerages I'm using are all in the link tree in my bio. This one I'm on right now this is the best one. The one I'd recommend. The one I'm on right now is in the link tree in my bio. That very first link there. So anyway, here's all the brokerages are up there. But here's Newsmax right here. They're only worth $1.1 billion, and they're at an all-time low. This is a crazy company because when they IPO'd, if this was crazy because only 5%, it's hard to explain, but the free float of the company, only 5% of the shares are available to trade. So the whole company's worth $1.1 billion. But only like 50 million or 5% of those are available to trade on the market or something like that. It might have been like 10%, but a super small amount of it. So whenever they IPO'd it, it slingshotted the stock higher because there was no seller. There were so little shares that there were no like sellers. But anyway, what do they do? Broadcasting, Newsmax. I don't know what this company does. Let's see. So it looks like they're losing net income every quarter. The revenue's up 18% year over year, but they are losing money every quarter. I don't know. Again, they just IPO'd, so like this is all the data we get. We don't get much more data besides that. Newsmax. Let's see here. All right, whatever. We tried. Someone said, "How'd you get so much money at such a young age?" Well, I have an old YouTube channel that made me a lot of money. If anyone has heard of Rust Moments before, yeah, that's where I made like $50,000 on that channel before I turned 18, and then that's how I really started getting into investing. I made a bunch of money on the Rust Moments YouTube channel. Then that YouTube channel got demonetized. Actually, I wonder if I could pull it up and not reveal anything. The channel's dead now. Actually, I'll be really quick about it. Oh, that's the wrong channel. Oh well. Oh, hey, there's that channel, though. You can see how much that made. I could do it off screen. But anyway, no one probably cares. Let's go here. Yeah, youtube.com/Rust Moments is my OG channel. Used to get like a 50 to 100K views a video. Oh, we got to get to Palantir. Whoa, we got to get to Palantir right here. So this is one of my favorite government contract plays. Michael Burry just shorted this company. Oh, wait, no way. Palantir announces 4-for-1 stock split? That's news. I don't know why they do that. They don't need to do that yet. But anyway, here's the crazy part about Palantir. If we go to their government revenue right here, their government revenue, it's up 55%. After it grew 33, after it grew 15. So the growth rate is growing on their government revenue. So the government revenue is up 55. Also, the commercial side of operations with other S&P 500 companies, that's up 73. After it grew 30, after it grew 33. So yeah, both sides of their business are booming, printing net income every quarter in an absolute monster of a balance sheet. I mean, literally no debt at all on this company. So yeah. All right. Oh, here, I'll be super, I'll have to hide it off the screen real quick. Yeah, I'll show you real quick. All right, so yeah, it's called Rust Moments. Here is my old channel right here. Like actually, this is where I made most of my money. Like here, like this video right here. If you want to see how YouTube works, this is an hour-long video, so the RPM's like a little higher than normal. But like this video right here, that one made 1.4K, and I have been making YouTube videos for these are 5 years ago, so I've been doing YouTube for like so long. But yeah, this was my life. This was my life for years. I legit made every thumbnail, edited every video, and all these. Anyway, yeah, that's my OG YouTube channel. Now I got this one. So hey, that channel got wrecked. That channel doesn't make any money anymore. YouTube demonetized. Well, actually, it does. Anyway. Let's keep going here. Marcus said thoughts on Pinterest. This is an interesting one because they're debt-free, making a bunch of cash. So you made Rust Moments? Yeah, dude, I miss Rust. Hey, Northern Jays, dude, thanks for the heart there. I really appreciate that, dude. Thanks for the gift there. But yeah, here's Pinterest right here. They're the same price as they were when they IPO'd in 2019. So they've been flat for a while. But here's a cool metric we get to see. Their monthly active users are 600 million, when the same time last year was 537 million. So that's seen nice growth. But yeah, they make most of their money on Q4 every year because that's hot season for advertising. But check this out. Or actually, I want to show you the balance sheet specifically. If we go to their balance sheet right here, it's a fortress. They have $2.6 billion of cash, and most of that cash is in these 1 to 3 week treasury yields. So if we go to their interest, they made $28 million of positive interest on their cash. Again, that metric we just looked at, if the company had a bunch of debt and paid negative debt interest, it's included in that number. So they're making positive 20 mil of interest. And you can tell as well, because like last quarter, the core business, the operating profit, they lost 4 million, but it says they made 30 mil because of the interest they're making on their cash. Anywho, analysts must have not liked something here. Maybe we can see if there was something that analysts didn't like. Advertising revenue grew 54%. Though pricing, so revenue grew 54%, though pricing declined 24%. So I don't know. User engagement expanded significantly with monthly active users reaching 600 mil. So hey, there you go. Hey, we got to get to Grab after this. Why did Cormetics rally then drop? I don't know, Steven. I'm wondering that too. Hey, what do you think about SHLS and OUST? OUST is actually a very interesting stock. Moomoo best app or not for long term? I think it is, Sorrow. I think it is the best. So, I'm missing so many stocks. Sorry, I apologize. Thoughts on FINV? Like, I want to get to some of these too. So here's Ouster right here. They're a super small company, so I wouldn't have a meaningful amount of money in them. Like, I have so many of these stocks, like where I love the companies, but I can't have them as meaningful size positions, like CPRX, Clear Secure, Toast, super microcomputer, like PSIX, I love, and I'm obsessed with PSIX, but I might actually go buy another share after this stream's over because I can't believe they're down 9%. But as much as I love a lot of these companies, I only keep a fun, couple $100 in them, and that's what I kind of recommend for OUST as well. I wouldn't have it as a crazy big size position, but here's why I'd still have them as a position, as a small position, because they're certainly interesting. They're beating on expectations every quarter, and the revenue is expected to just continue to climb higher, legit 30 mil to 42 mil. And since they beat on revenue every quarter, what's going to happen? And they're a thing people don't like is that they lose 20 mil a quarter. They lose a lot of money, which again, net income is just EPS. They're losing less net income than expected every quarter, which is good news. But again, it's the future growth of the revenue that's interesting. They sell LiDAR kits, something like this. I know Waymo uses a bunch of LiDAR kits. So as autonomy driving cars get more popular, maybe this LiDAR kit company will just benefit from that. Maybe it looks like some LiDAR drone kit maybe as well. I don't know. This is just their website, whatever. Anywho, there you go. That's Ouster. Certainly interesting. Let's check out Grab right here. GRAB. And could we nibble on Nebius at this price, or is it still overvalued? Nebius, I don't know, because the future expectation of the growth is insane. So it might actually just be worth it to nibble. As the whole AI stocks start to recover, they should recover faster with the high beta. Because, they're just tanking because NVIDIA's down so much today. Like, if we go to NVIDIA real quick, look at our new intraday. Okay, new intraday low right now. We're down 1.77%. Drop a like on the stream for me. Only McDonald's is green. But yeah, look at NVIDIA. NVIDIA's down 4. And if NVIDIA's having a cold, if NVIDIA's having a cold, everything else is sneezing, or I don't know what the thing is. But anywho, that's what's sending down. But here's Grab. Here's a whole, speaking of the LiDAR kit kind of autonomous stuff, here's a really cool stock. This is Grab Holdings. And I'd like to own this stock eventually, to be honest with you, because I know this commodity works. So what is this stock? What do they do? This is literally Uber, but international. So they do exactly what Uber does, the exact same thing, but in all these other countries. Like, notice the US and Canada aren't on here. They're in Malaysia, Indonesia, Singapore, Philippines, Thailand. So you get exposure to the commodity of ride sharing internationally, which I think it's a good way to invest away from the US and get exposure to these other markets. And check this out. And again, like every time someone books a little grab, and I've seen YouTubers talk about this. Like every time they book a grab, like they just collect a little fee. What I meant was that I was like watching this like travel YouTuber, and he's like, "No, dude, you got to book a grab. Like you don't want to trust the local people here. Like you want to anyway." But yeah, Uber Technologies uh, is the largest shareholder. That's another fascinating thing. Uber Technologies or Uber stock is the largest shareholder. They own 13% of all the shares. Toyota Motor owns 5.5% of all the shares. So they're backed by some strong names. And that's also genius for Uber. It gives Uber instant international diversification. But check out the net income. They're also net income positive every quarter. Revenue is supposed to go to $1 billion nearly. So EPS is expected to double or so. Anyway, yeah, EBITDA, look at that. It's supposed to be 106 mil. I love Grab. Actually, let me put them back on the watch list. Or I don't know why they weren't already on there. What happens is, hey, what up, Smoky Settings? Yeah, hey, by the way, this is actually a software. It's a brokerage where you buy stocks on. It's in the link tree in my bio, that very first link there. Chipotle let's check out Chipotle. You know, all the restaurant stocks are struggling. Has anyone noticed that? So look at Chipotle right here. They are down bad, but it's not just Chipotle. And I'm looking at all the restaurants right now. Like look at Wendy's. Wendy's stock is at an all-time low, lower than they were in 1997. Like random stock, like Jack in the Box, ticker symbol Jack, all-time low. And if you're wondering which restaurant should we buy the dip on, first off, I would go with McDonald's. But as a pure play, that might probably recover faster. McDonald's by far, but Chipotle. This one, they deserve this big gap down. They deserve this gap down, but the risk reward is starting to look okay on this one. It's not great, but it's starting to look pretty decent because, as you know, what's the PE on this company? PE ratio is a 27. Look, before today, the PE ratio was like 40 to 50, like insane PE ratio before today. Whenever you have a high PE ratio, it's okay as long as you meet and beat on your growth expectations. But every quarter, notice the past 3 quarters, they're missing on revenue. Every quarter, they missed on revenue. Let me actually see. They beat on their EPS. Let's see what the AI has to say. So revenue growth was driven by 84 new restaurant openings. So look at that. Partially, the growth was kind of artificially up from 84 new stores and a 1.1% increase in average check. Oh, that's good news. A 1.1% increase in the average check size, partially offset by a 0.8% decline in transactions. Whoa. So each store, I guess, is doing, well, that's not too big of a deal. Margins contracted with restaurant level. Let's just go look at their numbers right here. Here's the good news. Here's the thing that's still great about them. They still print money. They're still making 300 to 400 million of net income a quarter. So here's the margins are falling. Revenue's up 7.5, so the sales are up 7.5, but the net income is down by 1. What that means in English is that your margins are going down, and the whole industry is facing the same thing, where you have to up the pay to the workers, but your input costs are still high from just tariffs and inflation and everything. So interesting one for sure. All right, PayPal. All right, we'll do PayPal now. Let's do PayPal. They're actually not doing too well. They're the same price as they were back in 2017. So stock is almost flat from 8 years ago, but they did have a good earnings report versus what the analysts expected this quarter. It really was good. That's the orange line, what the analysts expect. They beat on revenue, they beat on EPS by a big chunk, and they beat on EBITDA. So it was a triple beat quarter. Let's see if there's any news down here. PayPal launches new cards and loyalty program. Their US card program isn't so good. PayPal expands buy now, pay later service to Canadian market with Pay in 4. Venmo launches Venmo Stash rewards. Oh yeah, they own Venmo. Yeah, they own Venmo, Honey, the Honey Chrome browser. But check this out. They make $1.25 billion of net income a quarter. What is PayPal doing with $1.25 billion of net income a quarter? Well, here's the thing. Since they don't pay a dividend, well, actually, funny enough, they now pay a dividend, but they just spend it all on share buybacks. If you look at the top, they spend $1.5 billion of net income every quarter solely on share buybacks. And here's what it does for you. The net income's up by 23, but the EPS is up by 31 because the share part of the ratio went down by so much more. So anyway, I think investors are kind of punishing them because they spent 6 to 7 billion on share buybacks just in the past year, which is 10% of the company. Again, they're only worth 60 billion. Imagine they spent 6 to 7 billion buying a company, like buying another Honey or buying another Venmo or something like. But they're cool. Bro, I just followed you. Hey, Street Gang, what up, dude? Thanks for the follow. I appreciate you, homie. Yeah, if anyone wants to hit the follow button, we stream every day. I legit sell nothing at all. I have no course, book, WhatsApp. I'll never. Yeah, watch out for people impersonating me. That someone said, would you just DM me a minute? I'll never follow you. I'll never DM you. Nothing like that. So yeah, Best way to support me though, if you did want to, this would mean more than gifting me a rose. Would just be subscribed to my YouTube channel. I'm trying to build up my YouTube channel. I don't get many viewers on there. I'm streaming on there as well. So if you missed anything, you can like rewind it, replay it on the YouTube stream. Sometimes I talk too fast. My bad. So TSRYY. Let's check this one out. So I haven't heard of this company, Treasury Wine Estates. Unfortunately, they're at an all-time low right now. They're worth $3.3 billion. So we're going to convert the currency. They're an Australian company, so we'll convert the currency from AUD to USD. Penfolds Treasury Premium Brands. Well, so yeah, since they're Australian, they report in halves, but for the fiscal year, they report in fiscal year too. But for the fiscal year 2025, they did 287 million of after-tax net income. So that's kind of the good news. They're still making a bunch of net income every quarter. Maybe it was a one-time adjustment. I don't think it was, but the sales are maybe kind of slowing, like 5.9%. You get a great yield. Wow, a 7% dividend yield. Maybe the dividend, maybe the high dividend is suffocating them. I don't know, but maybe you can check out their website. Let's see what they do. So yeah, they sell. Yeah, it looks like they just sell that red drink. I don't know if I can. Every time I talk about this industry, looks like it's Australian, so we can't even view it. All right, whatever. So there you go. I'd be careful with them. Hey, what up, Meltdown? How's it going, man? What about VG? Is that Venture Global? Let's check them out. Duolingo, Mr. Powell, what up, dude? We'll look at Duolingo and Oracle. We'll check those two out too. Do you play crypto or Forex? No, my strategy is kind of boring. Well, to other people, but to me it's not. But I just buy and hold. Well, depends on the portfolio. Like this portfolio right here. Like that's the thing with some of these growth tech stocks, just buying and holding them, you could equally or even sometimes or I think better returns just buying and holding stocks than you do trading crypto and then you do, or buying the right stocks. If you just buy high quality growth names and just hold them, like you legit get, since I've owned SoFi, I've gotten 40 to 50, or actually more than that. I've gotten like 80% of my money back a year since then. I've gotten over 100% of actually way more than that on Robinhood every year. Reddit, you get competitive, just as good returns buying, holding stocks. That's just one of my portfolios. I have different portfolios. Like there's so many different kinds of stocks. Like this is my dividend only portfolio where every stock in here pays a dividend. Got a Roth IRA. So anyway, let's look at Venture Global right here. I haven't heard of this stock before, but it looks like they're I've heard of them, but I don't know what they do. But they're nearly at an all-time low. They IPO'd not too long ago. Let's see if there's any news. Nope. All right. So, this is the company that has like some oil and gas projects. So they have these projects that they're already making revenue. Like check out the revenue expectations. It's supposed to be 4.6 billion. That's a huge increase from this quarter. And then 4.4 billion. And they're supposed to go EPS positive. They have been missing on their net income every quarter. But yeah, this is interesting. If these EPS projections are right and they make it, they're actually probably a decent value here. Yeah, check out the net income down here. They're making 500 to $1 billion of net income a quarter. They're headquartered in Virginia. So yeah, they're a U.S. company, oil and gas company. I think they're working on some oil and gas oil rigs, something like that. I wish I could give you more thoughts on them, but what's the app? Yeah, hey, what up, SAAQ? Yeah, hey, by the way, this is actually a brokerage where you buy stocks, software. It's in the link tree in my bio, that very first link there. It is an affiliate link too, full disclosure. So if you go and deposit like $100, we'll both get some free stocks. But it's a free brokerage, costs nothing. Hey, try not to spam there, dude. Yeah, hey, we'll try and get to FINV. So let's look at Duolingo right here. They are not financial advice, hey, Papa Dan, shout out Papa Dan for the gift there. I appreciate you, homie. Not financial advice. I would nibble on this stock right now, like right here, right now. If you don't believe the AI thesis is going to hurt them as much as the market's pricing in right now, but they're not, like, I would recommend them because their numbers are still amazing. Their subscription revenue, this is mainly a subscription model company. It's Duolingo, that language learning app. Their subscription revenue grew 46% year over year, 34% increase in paid subscribers. But check this out right here. 85% of their revenue comes from their subscription service. These growth rates in the middle are insane. Like, this is what's interesting. It's up 45%, after it grew 48%, after it grew 46%, after it grew 45%. So they're on an absolute streak of growth. And if you don't pay for their subscription, you see a bunch of ads on their app. And look at this. Their advertising revenue grew 45% year over year. And the last quarter's up 55%. So they're like, the growth is here with Duolingo. But again, one of the reasons that they're being hurt from the AI thesis. Kind of, OpenAI now has a competitor to Duolingo, another language learning app. I think Google is working on one as well. So I think they're saying that why would people pay for Duolingo subscription when maybe they could learn this language for free somehow else? But for right now, their numbers are phenomenal. And I love them. They had a little one-time positive adjustment to their net income. Their actual numbers were still phenomenal. They made about $30 million of net income, up 160% year over year. The sales are up 41%. So everything financially is headed in the right direction. It's really just the thesis that's hurting them and collapsing the multiple. And that's the reason why I'd buy the dip on them, not financial advice. It's because it's not their numbers that are hurting. It's the future expectation. It's the future numbers that analysts are expecting they think are going to be bad. Hey, Papa Dan, dude, with the more roses. Hey, if you got a stock you want me to look at, let me know there. I got you. So let's see. FINV stock. FINV. Thoughts on SoFi? Yeah, hey, SoFi's not good enough to buy the dip. I do own SoFi. I'm up like crazy. I regret every share I've ever sold a SoFi. But yeah, they're down 10% on the day. Jeez. I didn't buy the dip on them. I actually bought the dip today on Bull stock, Webull. I'm actually pretty bullish on Bull stock. So I bought some of them today. I also bought a share of Iron Mountain. Actually, I bought quite a bit today. I bought a share of Iron Mountain. I bought some CRMD shares as well. And I'll show you the other buy. I bought a share of Amphenol in this portfolio. But here's FINV, Finvolution stock. They're the same prices they were back in 2019, so the stock hasn't done too well. But let's go check out their numbers right here. Oh, so they're a Chinese company. So we're actually going to convert the currency from Chinese yuan to USD. So this is in US dollars now. So yeah, 80% of the revenue comes from China, and then 15% comes from Indonesia. So just because they're headquartered in China, they're always going to trade at just a low PE. So that's why they're trading at 4 times PE. But let's see, loan facilitation services, guaranteed income. I need some of that guaranteed income, net interest income. So let's go check out their numbers right here. So revenue is up 14%, and the net income is up 38%. So wow, they're doing 100 million, or this quarter they did 100 million of after-tax net income. That means their net margin is like 25, 30, or what's their net margin? Should be around that. Please. Oh yeah, or 21% net margin. There you go. So actually the numbers are great and they are really profitable. And the stock I also just bought in here today was Amphenol stock. There's the little buy order right there. So yeah, they're a lot. I didn't feel great about buying them because they're barely off all-time highs. But again, I'm focused on the quantity of shares more than because whenever I bought the stock, it literally lowered my cost basis. When I bought the stock, or before I bought the stock, I was up 119. Right after I bought it, I was up 109. So, but I don't matter. Hey, that's why you have a diversified portfolio. Coca-Cola is at an all-time high. That's why it's good to have some of these defensive names. Coca-Cola is at legit an all-time high today. I can't believe it. Or that's Coca-Cola Consolidated. McDonald's, look, every stock in my dividend account is down except for McDonald's. McDonald's is actually green in here. These defensive names do good. So let's look at Oracle right here. Is Oracle a buy? They had some crazy future expectations. Like they're legit expected over the next 2 years. Whoa. Expected like 300, I think it was 300 billion of annual revenue. But I can't believe that, dude. That's a huge major decline. It might almost be interesting to look at. Like that's actually concerning. Why has Oracle fallen so much from its peak? That's weird. Oh yeah, they do have 100 billion of debt. That's one thing I haven't loved about Oracle is how leveraged they are. But Anthropic reveals 50 billion AI infrastructure plan with Oracle. Oracle linked data center secures. Okay, yeah, they're opening up legit 30 new data centers. I kid you not. So Washington Post affected by Oracle suite cyber breach. Okay, anyway, let's go look at their actual numbers right here. It's really, this quarter, they missed on every metric this quarter, but it's the future expectation that sent the stock up. Like their billings, like their backlog of billings grew 300% in one quarter. And no, that's why the stock went up so much. But yeah, the sales are up 12, net income was flat. So again, the right now numbers aren't great, but yeah, look at this bounce sheet right here. This is not the best. The liabilities are really high. Let's go see what their total long-term debt is, the nasty stuff. So long-term debt, they got 82 billion of long-term debt, plus another 14 billion of capital lease obligations. It's tough to, well, again, they should be making a lot more net income, but they have 100 billion of debt, but at least they make 3 billion net income a quarter. But here's the thing, actually, no, they don't. So here's the thing, they have 100 billion of debt to pay. They make we'll call it 3 to 4 billion in net income a quarter. You forget that, or people forget that they also pay a dividend. So 1.4 billion of the net income they make is eaten to the dividend. So they didn't actually make 2.93 billion, subtract 1.43 billion. That's how much they, keep for themselves after paying the dividend. If you love Oracle, like Oracle's a pure cloud play. And one of the reasons, Google stock has done so good, and actually specifically Amazon, is because of their cloud businesses, and Microsoft Azure cloud is huge. Oracle has just been the purest cloud play. I get my cloud exposure via Google and Amazon. It's not a pure play, but it's actually, if you didn't know, the most valuable part of Amazon is the cloud business. You won't believe this. Their AWS business, their cloud business, it's legit over 100 billion of annual revenue for them. 33 billion just this quarter, up 20%. And it's their highest margin business. Amazon has so many businesses. Look, a lot of people know them for their online stores, Amazon.com, that's 40% of the revenue. Then they have the third-party seller services where they handle the logistics and stuff like that, where they collect high margin fees. But then their AWS business, which is really valuable. They're an advertising company now. There's ads on, obviously they own Twitch, Prime Video, and there's ads on Amazon now where you can pay them to place at the top of the ranking search. They have a subscription service, obviously Twitch Prime and Amazon Prime, where you collect high margin monthly revenue. They have physical stores. So what I'm trying to say is Amazon's an ETF in one. They're like an Oracle, a Walmart, a UPS, an Instacart, all in one, a robotics play, advertising play. You add Trade Desk in there. Yeah, the Trade Desk TTD stock, Amazon is their worst nightmare. All right. Hey, dude, no way. Try not to. Yeah. Hey, thanks for muting them, Jello. Yeah. Try not to spam that. That's not cool. We'll try and get to that one, though. How are you? How'd you start your career into investing, trading? I did it basically. I started investing the day I turned 18. I had a lot. Well, I was making a lot of money. Then I went from making a lot of money to making zero money, losing money. And I'm like, I need to do something with my cash. So I discovered investing. So again, is a common mistake. Stocks aren't get rich by Tuesday. Like investing in the stock market, it's to slowly build and preserve wealth. The idea is to compound at 8% yearly. You turn $100 into 108. Then that 108 goes to 120, then 120 to 150 every year. So it snowballs up. You get that compound effect. Everyone has their own strategy. You can see Warren Buffett's strategy. He goes for a lot of the higher yielding names, but still has some growth. Like he owns Apple, but then he owns American Express, Bank of America, Coca-Cola, Chevron, Oxy, Kraft Heinz, some of the higher yielding names. And then there's the Nancy Pelosi portfolio. She owns a lot. It's a great style. Copy this portfolio. And actually you're able to do that on this brokerage, but legit, this is a phenomenal holdings, Apple, Amazon, Google. If you don't own the S&P 500, you need to own these individually. Microsoft, NVIDIA, Netflix, CrowdStrike, probably my favorite cybersecurity stock out there behind PanW. This is a phenomenal. Actually, let me add them back to the top of the watches. I need to own. I'm either looking at Fortinet stock to buy or PanW or CrowdStrike. I want to own some cybersecurity name in my Roth IRA, but they've all been so overvalued. That's the one part of software that benefits from AI. We've all looked at Salesforce and Adobe. They're being crushed by the AI thesis, but one part of the software that I think is immune is the cybersecurity industry. As AI gets better, hackers will utilize it and get better at hacking. And I think the demand for cybersecurity has never been higher. Here's my favorite cybersecurity play personally. Over 50% of the S&P 500 are customers. They're a subscription model play. If we go to their subscription revenue, this is their annual revenue. This is why I trust them. It just hits a new record every year, every quarter, up 16 after grew 22, after 30. So, and not just revenue, but also after tax net income every quarter, immense amount of free cash flow, bill of free cash flow this quarter. So I love cybersecurity as an industry. There's also ETFs out there. I think this isn't the best one. It has a bit of a high yield. I don't know what the other good ones are, but there's ticker symbol BUG. It's an ETF. What version of the app? I think I have the most recent app. Yeah, hey, this is a brokerage right here. If you want to get it, it's in the link tree in my bio. First link there. Hey, we'll look at Bull after this. Netflix. Let's look at Netflix real quick. So Netflix, they're doing a reverse split. Let me actually see this right here. Wait, Netflix opens first physical entertainment hub. Okay. Netflix explores, oh yeah, the Warner Brothers Discovery acquisition. It could only help them out, adding that content to their website. But this one still has a bit of a too high of a valuation for me to buy meaningfully at this price. Like they still trade at 48 times net income. Like their EPS has to CAGR at like 20% through 2030, which they could, honestly, that's not great. I don't know. Here's the cool thing we get. We can see their premium subscribers, 301 million premium subscribers. They make $11.69 per month per user. They have had a lot of margin expansion because they introduced this ad tier where like the normal Netflix without ads is like a certain amount, but the ad tier subscription costs less, but they actually make more per user if they buy the ad tier. So they're making higher margins. So the sales are up by 17%. The revenue's up 17. The net income's only up by 7. So it looks like their net margin did fall this quarter, but that was last year's news. But yeah, they print 2 to 3 billion of after-tax net income a quarter. Same with FCF, which stands for free cash flow, over 2 billion of free cash flow a quarter. So they just print money. Like recession resilient too, almost. I love that reoccurring subscription model revenue. It might just be too high valued right here in terms of valuation. The risk reward doesn't look phenomenal to like super crazy buy the dip. I'm going to sleep. Thanks for the stream. I'll be watching a lot. Hey, thanks, Pedro. I appreciate that. Yeah, if you guys wanted the follow button, we actually stream every day, sometimes twice a day. I sell nothing, no course book. And if you missed anything, I'm also streaming on YouTube, so you can like replay it after. So here's one of my newest positions. I'll be quick about this one because we've already gone over it. Yeah, because the market continues to fall. But yeah, we own Webull stock. We actually bought a bunch of shares of them today. Well, not a bunch, but yeah, this is one, not financial advice. They're at an all-time low today. I think they're worth buying, like you're nibbling on. So Webull, that stock right there is this app, this brokerage publicly traded. I've used Webull for like 4 years. And they just now for the first time added in this prediction market stuff. And whenever, you go buy or sell a stock on a brokerage, they don't make much money, but whenever you start to do this prediction market stuff and do crypto, they're going to make a bunch of money. And the crypto is new and the prediction market's new. So I just really think they're going to beat on expectations these next 2 quarters. Just as a Webull user, I've seen the Webull users are the kind of people that will do this risky prediction market stuff. I really wouldn't recommend anyone to do this kind of stuff. But yeah, anywho. Okay. Ooh, hey, what up, K.O. Piang? I'm probably saying your name wrong. I'm so sorry. But hey, what's up, K.O.? But yeah, Webull, real quick about them too. If we go to their they just IPO'd, so we don't get too much data behind this company. We can already see they're pretty growthy. The revenue's up 46% year over year. I think it's going to be even more. I think it's just going to grow even faster. So, all right. Hey, yeah, we did do Meta. Remind me to look at Meta in a little. I do want to get back to Meta. Someone said, what's this one right here? InnoData. Let's do InnoData. Yeah. Let's do InnoData. This is a cool company because Meta is their biggest customer. I think it's either Meta or Google, but I'm pretty sure it's Meta. This is a data labeling software company. They're down 10% on the day. I do own them. RIP, look at this in my Roth IRA. We're down 10% on InnoData today. They might actually be worth looking into because their earnings were good. They announced this federal unit program where they expect like 25 million in new contracts from the federal government, which is phenomenal. But check this out. Every quarter they beat on This is a pure growth name. Like they beat on revenue every quarter and they're expecting to go to 71 million in 2 quarters. And their net income and EPS positive. That's what's crazy. They're making net income every quarter. It says down 52%. That was a one-time adjustment. The actual business hit a record, but yeah, they're making EPS or net income positive. Their main customers are legit Google, Meta, Amazon, Nvidia, and Microsoft. So they're pretty cool. And I do own them, so I'm totally biased. But Bull 2028 or 2027 leap could be nice. I mentioned you in a call. Yeah, spread the wealth. Yeah, I was like, hey, honestly, on Webull, like buy a long-term expiration call option on Webull. Like, I don't know about just like a simple call. I think might perform the best. So I think it is going to go up. I don't know though. Good buys for today. Hey, what up, Nikita? Yeah, hey, I bought a share of Amphenol today. This isn't a good buy, but a great buy. Like I really think it's a stock that like it'd be great for anyone in any portfolio. Was Iron Mountain right here. Great company, data center REIT. You get a 3.5% dividend yield. That's completely sustainable. What I love about them is they have a rule where they only keep their dividend payout ratio in the mid 60s. So they're cool. And again, they're falling 6% because they're AI related. And I'm actually shocked about that. Because they're a REIT and they're down that much. But anyway, today's an abnormally abnormally bearish day. Look at our main portfolio. We're down 1.84%. Yo, drop a like on the stream for me. Looks like our only green stock is McDonald's in here. Yo, spread the wealth, dude. Are you still in here? Check out this Coca-Cola Consolidated, up another 3.5% to a new all-time high. I can't believe. If you're wondering what happened on Monday, I've never seen a stock do this before. They bought back 22% of all the shares that existed just on that day. I couldn't believe it. So anyway, VRT. Let's get what up, GS Smith. Let's see VRT. This is Vertiv Holdings. This is a kind of I forget what this isn't Vistra. This is like an AI infrastructure play. They sell like these server products, or check this out right here. If we go to their product revenue right here, the growth has been great. It's up 34%. After grew 19, anyway, that's at a record right there. And not just that, but also their service and spare parts. That's also up double digits year over year. So both businesses are growing, beating on expectations every quarter. They beat on revenue, they beat on EPS, and they beat on EBITDA. And they've done that every quarter. So yeah, look at this net income. It's great. $400 million this quarter. That's after they paid $150 million of taxes. So Vertiv is definitely interesting. It might still be a little overvalued here though. Yeah, Coca-Cola Consolidated is an absolute growth monster. Kind of like Monster stock too. They actually bottle for Monster Beverage. Monster Beverage is, look at that. These are like recession resilient stocks. Monster Beverage, Coca-Cola at an all-time high as well. So pretty crazy. Is it a good buy if I buy more Coca-Cola now, or has it peaked out? Well, this stock, I think it's not worth buying. Yeah, now I would, even though the PE is a 23, that's the thing. Actually, the forward PE is even 20% lower than this because they just bought back 20% of all the shares. That's the crazy thing. I still see this stock going higher, but it's at an all-time high this moment. I don't love it, but yeah, APLD stock. Let's do that one. APLD. Hey, what up, Tally? So APLD, that one is actually a stock owned by NVIDIA. Hey, Nikita, thanks for the 20 gifts, the 20 roses there. I really appreciate that. If you got a stock you want to look at, let me know. I got you. Oh, and then we'll get to Meta after this too. So, we'll look at the year-to-date performance. So here is the NVIDIA portfolio. One of their largest holding is CoreWeave. Their second largest holding is in APLD. And again, just because NVIDIA owns a stock doesn't mean you should. You always want to go do your own research on it. And when we go do our own research on this company, we find some pretty cool stuff. CoreWeave's revenue forecast cut impacts APLD. Yeah, APLD and CoreWeave are really tied together. They have a big partnership, but they do pretty much the same thing. APL partners with, I don't want to say that name, for $1.5 billion power project. That's interesting. So anyway, they just reported earnings. They're now significantly down from earnings day, but originally they reported earnings on this day right here, and they gapped up a bunch because the earnings were great. Check this out. We can see what the analysts expected. Analysts expected 45 mil. Well, they did 65 mil, a big beat, and they narrowed their net income losses. This is a data center hosting company, again, just like CoreWeave. So, it might still be 38 times sales, but I don't know. They're falling just because everything else is. Honestly, the best play would probably be like to get exposure to the industry might just be CoreWeave. It's the safest, like biggest one out there. Nebius is also interesting. Hey, Eunice, what up, homie? Good to see you, man. Long time no see. Good to see you, man. Yeah. So let's pull up Meta right here. This is the company that owns obviously Facebook, Instagram. What I just saw, which is really interesting, is a lot of companies like OpenAI, for example, and ChatGPT, they used to run no ads because word of mouth, they just organically grew. But now OpenAI and ChatGPT, actually their CFO, the CFO OpenAI said the user growth is slowing down. They're now putting ads on Facebook. There's now OpenAI ads on Facebook. So I guess the only reason Meta is down is really because of a one-time adjustment. I mean, the whole market's down, so it falls because of that. But the reason they mainly gap down 10, 15% on earnings is mainly because of a one-time tax adjustment. That doesn't really matter. You can see their active users. They legit have 3.5 billion daily active users. So half the world is on one of their apps a day. They also own Threads, and Threads now has the same amount of daily active users as X. They also own WhatsApp, and they're just not adding ads to WhatsApp. But yeah, look at this. With the one-time tax, yeah, look at this. So if we go to their net income, this is the thing that spooked investors. The net income fell 82% year over year. And so the EPS fell 82%, but this was a one-time adjustment, $15 billion one-time tax adjustment. It was from the big, beautiful bill depreciation thing. But that's why you always got to blend these numbers together. That's why you look at the operating profit, the core business that actually was up. The profits grew 18% year over year. First ever quarter with $50 billion in revenue. Another actually thing investors are concerned with Meta is that if we go to their cash from investing activities, they might be spending too much on AI in like chips and stuff. Like if we scroll back, they used to, the metaverse investors were mad about them spending crazy on the metaverse, but they used to spend a reasonable $6 to $8 billion a quarter on investments and buying new assets and stuff. But now it's $20 to $25 billion a quarter. That's all their net income and all their free cash flow. They're spending 100% of the cash flow on investing, but I'm okay with that because they can afford it. They don't have any, I like them to pursue the growth acquisitions. Let's just hope it has real returns. All right. Why is Powell down recommending buying the dip? Yeah, hey, Powell's just down because the whole market's dipping today. Yeah, they're down 7.5% on the day. This is an AI electrical infrastructure play. They make these high quality switchgear solutions. They legit have a $2 billion backlog of orders. The whole company is worth $4 billion. They have no debt whatsoever, $460 million of cash. So 12% of the entire market cap is just their cash on hand. They also trade at 22 times PE, which is fair. But yeah, look at this net income. They made $48 million of net income this quarter. They do pay a dividend. The dividend is only cost right here, $3.2 million. There's so much room for future revenue growth or future dividend raises. And here's their cash on hand. Yeah, if you look in the top right, $433 million of cash. That cash isn't just sitting there doing nothing. It's earning them interest. They made $3.98 million of interest. That's more than the cost of their dividend. They legit make more interest on their cash than the cost of the dividend. So this 0.3% dividend is legit like free for them, basically. And the payout ratio is even lower than 8% because the EPS, that's for the last full year. I love Powell. I'm luckily up 4x on them. But honestly, I haven't sold a single share. I wouldn't sell a share on this dip. The valuation's so fair. 12% of market cap is cash. Like that's a great company. All right. Let's see, what app is this? Yo, Dorian. Yeah, hey, if you want to get this is actually a brokerage right here where you buy stocks on. It's in the link tree in my bio, that very first link there. It's a brokerage called Moomoo. Yeah, it's an affiliate link too, full disclosure. So if you go and deposit $100, we'll both get some free stocks. But yeah, by the way, all the brokerages are all in the link tree in my bio. I also have Robinhood linked up there. If you were talking about this one, this is where I have my Roth IRA. I love Robinhood for its Roth IRA. Dang, new intraday low on our Roth IRA. We're down almost 3%. We did buy the dip today a little bit. We bought one share of Iron Mountain, a couple shares of CorMedix, a couple shares of Webull. Honestly, I really like Webull here. Really not financial advice, but again, not as a huge size position. You don't want to have Webull as 10% of your portfolio or even 5%. But I have a lot of positions like that where I love them, but I only want them as a couple $100 size positions. I think Webull is worth buying at this price. What's the best cybersecurity play to start off in? Well, I would go with PanW, ticker symbol PANW. I'm actually heavily looking into getting a cybersecurity name on the dip. If you're someone with cash on hand, if you plan, the only reason you're upset about or should be crazy upset about this dip is if you plan to never buy that stock again. But if you have a stock that you really love and want to buy more of, we should be happy about this dip. I'm not doing, again, look at this right here. AMD's down 5. Disney's recovered a little bit. Davis down 11. SoFi's down 12. Reddit's down 9. Robinhood's down 10. Hit the like on the stream for me. We're losing lots of money. Yeah, if you look at the top middle, I have not actually had a bearish day like this in a long time. We're down 4.4%. Yo, my day just got better. Yo, shout out to the homie Maddie for the 25 Ron, for the super chat there. I really appreciate that, Label. Thank you very much, my friend. If you got a stock you want me to look at, let me know. I got you. CCTM stock. So yeah, I would probably go with, for a cybersecurity name though, I'd go with PanW, which is ticker symbol PANW, or CrowdStrike, CRWD. Oof. Fortinet is another great one. FTNT. Oh yeah, FUTU is another one. Hey, watch out for the guy in chat there. I can get that guy permanently banned. Don't worry. You ever see those guys in the chat that are like, the first 5 people to DM me, those are scammers. Luckily, I'm copying and pasting this guy's name to my friend, Freddie Taylor 10. Sorry, my friend, but your account will be permanently gone within a couple days. Okay. I love when they, okay. Hey, what up, Casey? He says, I followed your advice and now I'm homeless. No, Casey, what did you do? Yeah, hey, again, I know that guy's joking. I know, but none of this is financial. That being said, of course, none of this is financial advice. I don't sell anything. I'm not an expert. I'm literally a college student. So anyway, here's Castellum. Maybe I've heard of this one, but I don't think so. If you look in the top right, they're only worth $108 million. So a very, very small market cap, delivery of products and services in the information technology area. So it looks like they are beating on revenue every quarter. Again, they're worth $100 million. It makes sense because they're only doing 15 mil of revenue a quarter. But here's what's so interesting to me. They actually made $400K of profit, and that's after they paid their taxes, like $50K of taxes. They actually made $400K of profit. Are analysts expecting them to continue that EPS? So yeah, I mean, honestly, a $100 million company, if they're making a couple million, if they make $1 million every quarter, that's 4% of the entire company. They have a good balance sheet as well. Looks like they're deleveraging. Look at that. Wow. The liabilities used to be 58% of the assets. Now it's only 20%. Is that from dilution? Yeah, a little bit, but still, they're interesting as long as they keep up that positivity. Hey, okay, yeah, Lulu, it's a super red day. I haven't seen a red day this bad in a long time. And that's the crazy part. I don't think there's any specific news. It's really just momentum. Like valuation's probably just getting back to reality. I am shocked to see it disagree, like Comfort Systems down 7. Yeah. I am happy. I did get a buy the dip today, and I'll probably buy a little bit more of the dip tomorrow if it stays. Okay, let's see here. Hey, what up, Luffy? Good to see you, homie. So the SMHX ETF, what's this one? The SMH ETF is the semiconductor ETF. This is the, Fabless semiconductor ETF. So no like Taiwan Semi or there's NVIDIA, Broadcom, AMD. Well, it looks like a chip ETF right here. 0.35% expense ratio. That's actually fair. There you go. All right. What are we buying right now? If you don't own this stock, I wouldn't buy it yet. I bought a share of them today, but I wouldn't buy it yet. I'd put this one on your watch list. Amphenol stock, one of the highest quality stocks I've seen out there. I bought one more share. There's the little buy order. Bought one share of them today. And real quick, and I'll show you my other buys, and then I'll get back to the analysis here. If we go to our Roth IRA, we did buy some stuff. We bought, I forgot to really mention this. This is a whole new position for me. HCA Healthcare. It's now in my top 10 favorite stocks of all time. I'm talking like every metric there that I look at. It might be my top 3. Like there's not many stocks that have numbers as impressive as they do. Yeah, I bought 4 shares of them, but Iron Mountain, I bought 1 share of them today. Unfortunately, I didn't time that too well because I bought it at like 94 and we're 95 and it's at 92 now. And I bought a bunch of Webull. Well, not a bunch, but I bought some Webull shares, ticker symbol BULL. We're down pretty bad. Progressive Cook today. Let's see. So that's why I like having some defensive names as well, like Call Maine. That's the chicken egg stock. CPRX, it's the healthcare name. We're only up 3% on them. And then Progressive Corp. Progressive is a great stock. TAP is green as well. Yeah, Progressive, this is the insurance company. It kind of does, it shines in markets like this whenever tech is kind of selling off. Here's Progressive up 1% on the day. Pretty good. Wheel said thoughts on Tesla. Okay. Let's cover Tesla. I normally, I don't like covering this one because every time I cover it, I say bad things and then my viewers drop. But I think it's no crazy thing to say that Tesla is pretty ridiculously overvalued. I've literally looked at the actual 2028, 2029 EPS analyst expectations that prices in their current stock, like legit about $200, $180 of their current stock price is legit future growth priced in from future robotics and future robo-taxi network. I don't think the analysts include this, like a certain margin, it's like over $1 per mile or some crazy per mile. They're going to make per mile on this autonomous driving stuff. I think it's going to be so commoditized with Waymo and Zoox and everything. But anyway, Here's the numbers right here. Tesla, it's okay to have a high valuation. If we go to their PE ratio, they trade at 274 times PE. It's okay to have a high PE as long as you have the high growth to justify it. And I don't really see it justifying it. Like if you go to the revenue year over year, revenue's up 11, but last quarter it was down 12. The quarter before that it was down 9. The actual profits here. So the revenue grew by 11, but the profits fell by 33. Their margins are being squeezed. Gross margins are down 10. Net margins are down 43. Low single digit margins. Now it's unfortunate. Anyway, Tesla is still interesting though, but how's the energy business? Yeah, that hit a record, which is good. But it's a tough one to buy their multiple. Like there's so many growth stories out there where like, let me go back to the market cap. There's so many stocks out there that I think are going to 4x. Like if you could look at Tesla right here, the market cap is 1.3 trillion. There's only so much how many times they could double from here. Like they could be worth maybe like Tesla, his pay package is for 7 trillion. Like I think there's so many better stocks that I think could double, triple, quadruple before Tesla. Or I don't know. That was probably so bearish though, but anyway, Nathan, are you in school? Yeah, this is why you don't listen to me. I'm a college student. Don't listen to me. I'm not an expert. Let's see. Hey, what up, Chad? T1 Energy. Hey, what's the ticker symbol for that? Gold is absolutely cooked today. Let's look at gold. That's ticker symbol IAU is the gold ETF. Arguably, or almost in all scenarios, buying IAU, the ETF, is better than buying physical gold. If you go buy gold in small quantities, you're paying a lot more, and you pay the spot gold fee. You pay a spot fee whenever you buy it and you sell it in person. Also, if you're buying a meaningful amount of gold, you have to, store it somewhere. You pay for storage. And anyway, yeah, it is interesting to see gold down 1% today. Usually gold is one of those safe haven assets, kind of like oil. Like Murphy USA is my oil stock. They're up 2% on the day. It's kind of weird to see gold not be green today. Thinking of buying Celsius right now. Let's check them out. Yo, I actually really like Celsius. Is Red Cat? Let's look at Red Cat after this. And hey, everything cooked. Okay. So Celsius right here. This is that energy drink company. They bought Alani about a year ago. And now Pepsi took a 7% stake in Celsius, and they didn't pay them as much money because they gave Celsius Rockstar Beverage. So the Rockstar Beverage revenue and brand is now under Celsius's name. Let's see right here. Revenue growth was fueled by acquisitions of, Alani and Rockstar. But look at this. This is the best news. But alongside that, for the Celsius brand had organic growth of 44%. And so that's crazy. The Alani and Rockstar Energy led to the other growth. But yeah, profitability declined to 200 mil or negative 200 mil because of a distributor termination cost. So they used to have a distributor, but now in like a manufacturer, now they're actually giving it all to Pepsi. So they had a termination fee related to that. So it says the net income was negative 61 million. It wasn't actually that they actually, here's so you can tell you go to the operating profit, which doesn't include the one-time adjustment. They actually made 166 million of profit. That's the before tax number. You just probably subtract 20 million out of that for taxes. They actually made around 120 million net income this quarter. So yeah, the sales are up crazy, 172% year over year. Again, if you go to the cash from investing activities, it's negative 1.27 billion last quarter. Again, you want this to be negative. That means you're buying an asset. That's when they bought Alani. So yeah, the growth is back on Celsius. And the fact that Pepsi is the one distributing all their stuff is great. What app is this? Yeah, hey, what up? Hey, by the way, this is actually a software, a brokerage where you buy stocks on. If you wanted to get it, it's in the link tree in my bio, that very first link there. So Red Cat, I think this is a drone play. One of my more favorite drone plays. Wow. They are not having a great day. There's honestly there's some deals out there. So let's see. They make these drones. It's the future growth. Like their right now numbers are terrible. Like if we look at the right now revenue, the revenue was 3 million, down 18% year over year. But check out what analysts are expecting in 2 quarters from their, Black Widow drone orders from NATO and stuff. Their revenue is going to, again, 3 million this quarter, a big miss on expectations. Analysts expected 7 mil. They only did 3 mil. That's also might have been why they're falling on earnings. But they're expecting, you're really waiting for the next 6 months, or you hold this for another year as they really get their revenue to 50 million in just that 1 quarter. You annualize that, that's 200 mil of revenue a year. So anyway, interesting drone play. Probably wouldn't have it as a huge size position though. IAUM is cheaper. Really? Oh, because it's the micro one. Wait, let me actually pull this up right here. What's the expense ratio on this one? 0.09. No way. You might have just found me my new favorite gold ETF. No way. The homie came in clutch. That's actually nuts. Let's actually compare it to IAU, which is the main gold ETF. Please. Okay. IAU gold compare. Yeah, it's identical. Moves exactly the same. So it's the same ETF with an even lower expense ratio. Thank you for that. Okay, so whoa, TJX stock. This is actually a fascinating company. I didn't realize how great and they're up on the day. All-time high on this stock today. When the market's, kind of struggling today. What was that drone play? That was ticker symbol RCAT, Red Cat, RCAT. And by the way, if you missed anything, I'm also streaming on YouTube, so you can rewind it. My YouTube channel is called Nathan Roberts, also in the link tree in my bio. By the way, that's the best way to support me. I'm trying to build on my YouTube channel and get more viewers on the YouTube stream. YouTube channel is called Nathan Robert. You can just type it into YouTube, Nathan Roberts, also in the link tree in my bio. But yeah, here's TJX. It's that grocery, well, not really a grocery store, just like a retailer store. They own Home Goods. How's that doing? Hey, that's actually up 8.4% year over year. Marmax. Well, let's go look at their net income down here. These are recession resilient. Oh wow, they're doing over $1 billion of after-tax net income a quarter. They pay a 1% dividend yield. Are they doing share buybacks too? Here's how you can tell at a quick glance. You look at the net income; it's up by 13.1. And the EPS is up by 14.5. So they actually bought back about 1.5% of all the shares. Not too bad. So they're making $1.3 billion net income a quarter. The dividend only cost they just rose it. Look at that. 420 mil to 470. So there you go. You need to give us details on HCA. Yo, let's do HCA real quick. Hey, remind me to get to Meta. We've already looked at Meta a couple times today, but I do want to get to them. This is my newest purchase that I legit think is going to one of my favorite stocks of all time now in terms of just a quality name. And here's the thing. I bought the stock yesterday at an all-time high. So I didn't buy the dip on this one. I bought it yesterday at an all-time high. I think they're just going to continue higher. The PE ratio, the forward PE is a 17. So a 17 forward PE. So they pay a dividend. The dividend is 72 cents a quarter. Look at the EPS. If we go to the EPS right here, it's 69 cents. So, yeah, really, that's their net income per share. Look at their free cash flow per share. It's $19. I mean, this is nuts. So if you go to the revenue's up 9.5, but the net income is up by 28. And the net income's up by 28, but the net income per share is up by 42 because the share part of the ratio went down so much. You ready for the very best part about this stock right here? The main reason I bought the stock, the thing I just could not believe. If we go to their total common shares outstanding that exist, they've bought back 9.6% of all the shares that exist just this year. So the total common shares are 229 mil. It was just 255. Then it was 275 mil. Then there was over 300. And this is just since 2020. There was 338 million shares in 2020. Now there's only 229. And whenever you buy back your own shares, you don't have to pay dividends to those shares. Let's go see the cost of the dividend. It should go down as well. That's going to be tough to find. Oh yeah, here's how much they're spending on buybacks a quarter. Look at the bottom. This is how you can tell. They spend 2.5 or they spend 1.5 to 2.5 billion dollars a quarter on just share buybacks. They never dilute. You look at since 2021. This is how the shares outstanding go down so much. They spend billions a quarter on share buybacks, and they can afford it too because the dividend. Let's go find how much the dividend cost. It's so little. The dividend only cost 160 mil a quarter. And they made 4.4 billion of free cash flow and 1.9 billion in net income. So they could legit 3 to 4x their dividend right now. They just choose not to. They're also they're green on the day. That's what's kind of also recession resilient or resilient about them. As tech is going down, this stock is green on the day because they're healthcare. So that's why I bought them. I'm actually going to make a whole YouTube video, a whole video dedicated to them soon. Yeah. Is it worth getting the Pelosi portfolio? Hey, or what do you mean there? Yeah, here's the Nancy Pelosi portfolio. I'm a fan of all her stocks. There's no stock in here that I really wouldn't own. I'd happily own Visa. I'd love to own Visa, PanW, CrowdStrike, Netflix, NVIDIA, Microsoft, Salesforce, well, maybe Salesforce, but Google, Amazon, Apple, all great holdings. And notice a lot of these super investors all hold like a lot of the Max 7. Like Nancy Pelosi's largest holding is Apple. If we go to Warren Buffett, his largest holding is Apple. If we go to Donald Trump's portfolio, besides his company, his largest holding is Apple. The Soros portfolio, like there's a reason these super investors own Apple, like NVIDIA, and own the Mag 7. Like if you need to own the S&P 500, and if you don't own the S&P 500, you need to own those names individually. Okay, what happens? Oh, yeah, hey, what up, McGucket? Yeah, this is actually a brokerage right here, software. It's in the link tree in my bio. It's that very first link there. It's where you buy stocks on. It is an affiliate link to full disclosure. So if you go and like deposit $100, we'll both get some free stocks. But yeah, it's a free brokerage, costs nothing, no commissions at all. My favorite one. Okay, did you talk about JD? Let's look at, I don't love, this is JD. This isn't a great name. It's a Chinese retailer. I'd rather own a US retailer, but this just isn't a quality company. I don't really expect it to outperform the S&P. They have a dividend now, I think a pretty good one. Let's see. Yeah, 3.4% dividend. So you actually get a pretty decent dividend. As you know, whenever the price goes down, the yield goes up. But yeah, there's a Chinese retailer. I'd much rather own Amazon, and I do. Honestly, I'd rather own Alibaba, BABA, if I had to pick one. Yeah, sorry, that probably wasn't too helpful there. Hey, Devish, what up, dude? He said Parks, PRKS. So yeah, this is the company that owns like SeaWorld. I think they own like Legoland. I don't remember. Let me actually go check real quick. Discovery Cove, Sesame Place, Busch Gardens. I haven't heard of some of these places before, but it's kind of like a smaller Disney World. They own a bunch of theme parks and stuff like that. And that is Disney's down 10% today. Let's see how they're doing. Oh, they're actually only down 0.5. But if we go to the revenue, this is the bad news. The revenue's down 6.2 after it fell 0.4, after it fell 3. So they're not growthy. And if we go to their net, and actually, at least if you average out the 4 quarters, they are making net income every quarter. They're actually making like 30, 40 mil of net income a quarter, but just not too quality of a name. Actually, wow, they're the same prices they were back in 2013. So if you bought the stock 12 years ago, it's the same price that it is today. And they don't pay a dividend anymore. So that, I just don't, I'd rather own Disney. That's kind of the whole industry. If you go to ticker symbol FUN is Six Flags. Yikes, look at Six Flags. Lower than they were in 1997. You bought Six Flags in 1997, you're down on your position. Ooh, what's that other one? The ski company. Oh, it starts at the V. Vail Resorts. Let me try out Vail. How are they doing? MTN. Yeah, dang, they're the same prices they were back in 2016. So it looks like a lot of these. This one has a high dividend as well. What's the dividend on Vail Resorts? 5.9% dividend. When I look at their numbers, you can see when it's summer versus winter time. If we go to their net income down here, every time they make net income these 2 quarters and they lose net income 2 quarters. Make net income 2 quarters and they lose it. It's so seasonal, like literally, because it's a ski resort company. I wonder if you actually average it out if they're net income positive. They might actually be slightly net income positive. Okay. Ooh, Isaiah said KO stock. Hey, then we'll look at Astera Labs after this. Remind me to get to that one. But yeah, if we actually, speaking of Coca-Cola, you know who owns that one? That's the homie Warren Buffett. And, Coca-Cola is shining today. Whenever tech is red, here's Coca-Cola. They're green on the day. So you do not expect Coca-Cola to outperform the tech-heavy S&P 500 in the long run, but what you do get with Coca-Cola is, it's a recession-resilient company, but you get a 3% dividend. They slowly raise their dividend every year, but you get a 3% dividend, and then you get 3 to 4% in stock price appreciation every year. So about a 7% total return every year. So you get about 7% of your money back a year with them, almost always, like in all environments. Not financial advice here, but they make good money. They're a reliable company. To just like you can sleep very well at night knowing they're safe. They're a better play, like because of their syrups business and stuff. They're almost like a better play than Pepsi. Oh, I love Mondelez too. MDLZ. This is one of my favorite stocks. Probably actually this is my favorite food stock probably out there. Between like General Mills and stuff like Mondelez. They own Oreo, Chips Ahoy. Oh, there's so many brands I can't even mention on here. Like Cadbury, what's Toblerone chocolate? Like they own the high quality stuff. So wait, what was that stock I wanted to pull up? Oh yeah, Astera Labs. Ooh, Kratos is cool too. So Astera Labs, they are on my watch list. I do really like this company. The stock is down 10% on the day. That's not great. Let's see, is there any weekly news here? Supreme Court reviews semiconductor industry tariff. Well, hey, maybe that'll go away, hopefully. But let's check out their most recent earnings report. Revenue growth of 104% was driven by Ares PCL6 solutions ramp up. Strong demand for their Taurus Ethernet smart cable modules and expansion via the Xscale Photon acquisition. All right, that sounds interesting. But yeah, check out how every quarter they just beat on expectations. You know, the orange line's what the analysts expect. They beat on revenue every quarter. Whoa, look at the beat on EPS here. Analysts expected 23, they did 50, and that's a big beat. And not just on their EPS as well, but also their EBITDA. Look at that. Just a triple beat quarter. So no wonder they're gapping up on earnings. So if we go to their sales right here, the sales are up 103%. And the net, wow. Their net income positive every quarter for the past 4 quarters. So pretty cool. Don't you have to pay 14% in taxes when you sell your stock? So you need to make 14% just to. No, hey, that's not how that works. Well, so actually, you want to know a fun fact? It all depends on your tax bracket. You want to know a fun fact? And actually, I'm planning on making a video about this. Not tax advice or anything, but and I just pay my taxes for so I know in October, I pay my taxes in October every year, but here's how it works. If you make under $48,000 a year, if you're single, not married, and you just it's higher if you're married, but if you're single and make under $48,000 a year, which is me, you pay 0% taxes on long-term capital gains. So as long as you hold your stock for over 1 year, if I go sell, because I've held it for over 1 year, if I sell my Meta right now, all these gains that I had on Meta are completely tax-free, even in my taxable account. Also, qualified dividends as well. So like McDonald's, this is in my taxable account. Whenever I receive dividends like this $26 dividend I got from McDonald's, it's completely tax-free because I make because it's taxed at long-term capital gains, and I make 48K, the long-term capital gains is taxed at 0%. And if it's short-term capital gains, it's only taxed at 12%. There you go. Okay, hey, happy Thursday. Hey, what up, New York? Good to see you, homie. Just dropped in. Best hedges against tech. Yo, that'd be McDonald's, Coca-Cola. Do you like Hims? Yeah, Hims is interesting. I don't know. I don't love it here. Bought Race a while ago because the info you presented, it's doing well. Hey, nice, Island. Yeah, Ferrari, they're a really good company, I think. They're only down 0.3% of the day. I wasn't just recommending the stock because they're on such a massive dip, but I'm recommending the stock because they're such a quality company, massive backlog, ability to raise price. They had a nice beat on revenue was a nice beat this quarter. EPS was a nice beat, and EBITDA was a triple beat quarter. They make $400 to $500 million of after-tax net income a quarter. You get 1% in dividends plus 1% share buybacks. They have the ability to raise prices because their consumer doesn't really care if the price of a Ferrari goes up for like $1 million to 1.1 million. Like their consumers, the people buying Ferraris don't care. They're the company that can have pricing power and have the ability to raise prices onto their consumers because their consumer is so rich. So they're kind of like an interesting bet into like pricing power. Like they're not affected by like the consumer stocks. Like they're resilient. What's a good buy for today? Well, hey, I bought a few stocks today. I've already covered it so many times, but I think Amphenol, or I bought 1 share of Amphenol, where, already lower. They're down 5% on the day. The market's still falling, bro. That's what sucks. I don't know how that's possible. But yeah, on the day, we also bought a share of Iron Mountain. We bought 1 share of Iron Mountain. We bought a couple of shares of CorMedix. And this is the best buy, I think, right now out of all the stocks that I think are the best buy, risk to reward, but not as a big position, would be Webull stock, ticker symbol BULL. I plan to add a lot more to that position. Can we look at SoFi? Let's look at SoFi. Yeah, SoFi's down 10%. Yo, I'm down bad on SoFi. Check this out. We do own them. Let's see. Yeah, here's what's up today. Progressive, the recession resilient names like TAP are up. But then we go to our losers. Disney's down 10%. Dave is down 10. SoFi is down 12. RIP my SoFi position. Well, hey, even after this dip, it's still not a great buy. What's the forward PE on SoFi? Let's check. So even though they're down 12%, they're still trading at 76 times next year's net income. So they're still pretty expensive. But here's why SoFi, out of all the stocks that have really momentumed higher recently and had a crazy rally, SoFi absolutely deserves this rally because of their good growing fundamentals that analysts did not expect. Check this out right here. The revenue's up 76% after grew 101, after grew 141, after grew 300. The growth is insane on their financial services. And also their main lending revenue, that's up 25% to a new record as well by far. So here's what the analysts are expecting. They're beating on expectations of revenue every quarter, beating on EPS, beating on EBITDA every quarter. So that's why I think people are just really starting to take SoFi serious. So I definitely put them on the watch list. I wouldn't buy meaningfully yet. I'd maybe nibble, but I wouldn't buy meaningfully yet because still the 76 forward PE is still a bit expensive. Papa Dan, heck yeah, let's do ECO stock. Yes, sir. ECO. What is that one? Eco. Moomoo doesn't have a US or USA America option, or yeah, it does, or it definitely does, or because I was able, yeah, it definitely does, or wish I could help you out there. But here's ECO right here. I've actually never heard of this company before. Okeanis Eco Tankers. So a tanker company. They're up 10% on the day. That's actually pretty interesting. Let's go look at what they do. Actually, I like finding niche stocks like this. Crude oil tanker segment. So 43% of the revenue is Europe, 41% Asia, and then North America is only 9%. Are they headquartered in the US? They're actually headquartered in Greece. So let's see their website real quick. I want to get a visual of these oil tankers. Oh, so maybe huge ships or apparently. Huh. That's, I don't know many stocks that do anything about that. That's really interesting. Yeah. Red Sea shipping stock. And this is in USD as well. They're making net income every quarter, 24 mil this quarter, basically 100 million in net income a year. Revenue is 90 mil. It's finally growthy or back to growth. Sales are up 6%. Last quarter was down 16. So maybe they gave some good guidance or something because, maybe we can see, yeah, right here, they beat on revenue by almost over 10%. They beat on revenue, they beat on EPS, and they beat on EBITDA. It was a triple beat quarter. I'll put them on the watches. It's actually pretty interesting. Greece company. Nice to percent correction today for people to buy your favorite stocks. Hey, what up, stocks? Absolutely great day to buy the dip on your favorite companies. So Lucas said TE. CRMD had good earnings. I totally agree, Eunice. CRMD had great earnings. So let's pull up. Oh, hey, what up, Hid? Hey, thanks for showing to the YouTube stream. Yeah, we'll look at CSU and Meta. I think that's Constellation Software. They're a cool company. So here's T1 Energy. Haven't heard of this stock before. Actually, they have not done too good at all. They IPO'd in 2020 at $10. Now they're $3. But there is some momentum the past couple of weeks here. Let's see if we can see any good numbers here. So actually, wow, the revenue is expected to be $300 million in 2 quarters. They did miss on the past 2 quarters. They've missed on their expectations, and they missed on their EPS, and they missed on EBITDA. So they've triple missed every quarter the past couple quarters. But it's still certainly interesting to see, their literal revenue go from 2 mil to 132 mil. And then in 2 quarters, it's going to be 300 mil. So that'll be interesting. Yeah, EBITDA is supposed to stay negative, and same with EPS. So I don't know. I'd be careful with that one right there. So CSU, this is the Canadian Constellation Software Company. And they're what I like to call a serial acquirer, where they just acquire a bunch of businesses. The stock has not done too good though. They're an ADR, so this is in USD. We've converted the currency. So let's go look at the revenue. The revenue grew 16% year over year, after grew 19. So they're on a nice streak of growth, and they're net income positive every quarter, making 100 to 300 million of after-tax net income a quarter. If we go to their cash from investing activities, again, if this number is negative, that means they're buying an asset, buying land, buying a company, whatever. buying chips, this would be negative, and they're literally plowing 5 to 600 mil, or actually a little less than that, but like 3 to 500 million of net income a quarter just buying new assets. Yeah, look at their cash from operations. It's incredible, up 33. So, all right, we'll look at a couple more stocks here. Oh yeah, MicroStrategy. Hey, thanks, Papa Dan. I appreciate you, homie. Yeah, well, hey, we'll look at Micron too. Don't worry. Hey, try not to spam there. Micron is next for sure. We'll get to Micron. So here's MicroStrategy though. This is basically just a Bitcoin proxy. Again, if we go to their cash from financing activities, look at this. They diluted you by $18 billion this quarter, which was like 20% of the company at the time. They diluted you by $18 billion that quarter and bought $18 billion worth of Bitcoin. And since then, it's up like 20%. But yeah, that explains how if we look at their assets on their balance sheet, it just hits a new record every quarter. That's literally from them issuing shares to raise cash and then just buying Bitcoin with that cash. So it's literally... It's just a Bitcoin proxy. I wish I'd give you more thoughts on them, but it literally kind of just follows whatever Bitcoin does. Or there's new regulatory changes around it. If you're bullish on Bitcoin, then you should be bullish on that one too, I guess. I'd rather probably just own Bitcoin in the long run. I don't know. They're interesting. So here is Micron Technology. So this is a chip play, and they finally caught up to reality and caught up to their normal PE. They're finally back to all-time highs. If you go to their PE ratio, it's still even now pretty fair for the growth that they have. They're trading at 30 times net income. The industry average is 50. You look at NVIDIA, AMD, Broadcom, all of them. They're all really expensive, high multiples, but this one's one of the cheaper plays. Cloud memory business, mobile. So they're really diversified in all their revenue streams, but check out the growth. This is why they deserve a high PE. The revenue is up 46% year over year after it grew 93. So they're on a nice streak of growth, and not just the top line that's growing, but also the bottom line. They made $3.2 billion of after-tax net income this quarter. That $3.2 billion was after they paid, $400 million, $500 million of taxes. So pretty cool. Okay. Kvu. Hey, what up, Clay? So Kvu, this is the company that owns Tylenol. They own Neutrogena. They own the Band-Aid brand. Johnson & Johnson baby oil. I mentioned that because, not that baby powder. The baby powder is actually being investigated right now by the UK for causing the C word. So there's, on top of the already headwinds around the Tylenol stuff, there's headwinds around the baby powder now too. But anyway, look, even before the whole news around Tylenol and that, I wouldn't have bought this stock before today. If you go to the revenue right here, it already hasn't been great. Revenue's down 3.5. Last quarter was down 4. So there's not too growthy of a company. This was a split off from Johnson & Johnson. Johnson & Johnson spun them off with really way more debt than they should have. So they have a lot of debt to pay. And look at this net income. So they made $400 million in net income the past 2 quarters. Look at that. So $400 million of net income for the past 2 quarters. Where they pay a dividend. In the dividend, look at the top right. It cost $398 million. All of their net income is being eaten up by the cost of the dividend. And look, the 2 quarters before this, they couldn't afford the dividend. They only made 322 and 293. So I really think their dividend payout ratio is suffocating them. They're already not growing. They really should cut their dividend, but I don't know. Maybe the people are interested in them because maybe the Tylenol sell-off has been overdone. All right. Hey, watch out for that person in chat there. Guys, watch out for people impersonating me. Yeah, by the way, I'll never follow you, DM you. Yeah, I sell nothing. I have no course, book, WhatsApp. I'll never follow you, DM you, nothing like that. I'm literally just on here giving my opinion. So yeah, none of this is financial advice. What broker you suggest for a newbie? Yeah, hey, Strawberry. Yeah, this one I'm on right now. Yeah, hey, this brokerage I'm on right now, it's in the link tree in my bio, that very first link there. It's free, costs nothing, and it has the most useful tools. Yeah, lowest commissions, no commissions at all. I mean, no fees, no nothing. It's just a useful brokerage. You get all the Pelosi trackers and all that. So yeah, I have an affiliate link in the link tree in my bio, the very first link there if you want to get it. So yeah, if you go and deposit $100, we both get some 2 or 3 free stocks, so a fractional. Anyway, But also Robinhood's another good one. But all these brokerages are good. Like it doesn't, you can buy a stock on any app, but it's the brokerage that the features of it I love, and it's this one right here. But yeah, Robinhood, all the brokerages are linked in the link tree in my bio. Yeah, hey, thanks, Luffy. Analyze Amazon. Let's do Amazon. Yeah, sadly I can't cover DKNG because of the industry. But I'd rather own Robinhood or Webull than DKNG because they're coming for them. So let's pull up Amazon. It's one I do own. If you look at the top left, this is called our buy and never sell portfolio because once we buy a stock in here, we try and never sell it. If you look at the top right, though, today's profit and loss, we are down 4.66% on the day. So hit the like button for me. But one of the stocks we own is Amazon. This is a great never sell company. Yeah, every time I ever buy a stock in here, you can see the buy orders, and I never sell it. Once I buy it, I never trim it. But yeah, Amazon, this is an ETF in one. I mean, it's an Oracle Cloud. It's a Walmart, an Instacart. It's a trade desk with their advertising business all in one. Let's actually check this out right here. Look at their AWS, Amazon Web Service businesses. This is the most valuable part of Amazon. It's over $100 billion of annual revenue for them. Because they don't make too much margin shipping you that package overnight. But they do make a high margin whenever on the cloud service providing stuff. They're also an advertising company. Yeah, they're an advertising play, best robotics play out there. Robotics play, drone play, advertising play, e-commerce play, subscription play, grocery store play, and they're printing net income. Like this is their after-tax net income. They're making $20 billion of net income a quarter. And if we go to the cash from investing activities, they plow money into the future, like 26 billion, 40 bill. That's this company doesn't pay a dividend, and they also slightly dilute you every year. And I'm actually okay with that because this company, had to ban some more people in chat there. Yeah, but anyway, if you ever see the chat in the chat's like, I'm blessing the first 5 people. Yeah, but watch out for those people. I'll never follow you, DM you. I don't sell anything. Okay, so that was that. I forgot we were looking. Oh yeah, Amazon. Yeah, Amazon's a great never sell. Like if you have the intention, like me, to never sell it, it's worth even nibbling and dollar cost averaging right now at this price. Like it's worth it. So yeah. Zeta stock. Let's actually pull up Zeta real quick. Zeta Global. Hey, Looney. Hey, shout out to the member Looney. We'll look at GLW Corning after this in Affirm. Hey, that's the buy now, pay later stock. How does one get in contact with you? I don't really have a way to, I guess you can DM me on TikTok if you need something. But yeah, no, I don't really have probably should, but look, I don't even have a business email. Like if someone wanted to sponsor me, like they don't even have a way to. So that's my promise here. I don't want to, but anyway, here's Zeta Global. But if you do want to DM me, I guess, DM me on TikTok or, I don't check Instagram. I don't know. Okay, well, here's Zeta Global. I'll probably check my TikTok messages. But here's Zeta Global right here. What I like about them is how they're beating on expectations every quarter. They beat on revenue every quarter. They actually missed on net income this quarter, but they did beat on EBITDA. So it was like a mixed bag. But yeah, check this out. The sales are up 25 after they grew 42. So holding on to that growth and continuing it. And they narrowed their losses. They only lost $3 million. They barely lost any money. That's the great news here. This growth rate, they're going to be making net income and making EPS. Let's go see. Yeah, they're expected to be net income positive next quarter. So interesting. I don't know what they do though. Maybe we can check out their website. Consumer intelligence marketing automation software. Here's their website. Super intelligent agent. Wait, what did that say right here? Okay, one powerful engine for ROI. Anyway, sounds like a interesting software company. Carrier pigeons. Okay, let's pull up GLW. GLW, this is Corning is just like Amphenol stock, but they're down more than Amphenol. I bought the dip on Amphenol stock today. But yeah, here's Corning right here, down 7.7%. Let's go see any AI news over here. Corning establishes $1.5 billion solar wafer plant in Michigan. Huh. Right, let's check out the earnings hub here. I know their optical communications sales grew 33%, driven by Gen AI demand, with enterprise sales up 58%. Automotive sales, which kind of makes sense, I guess, in this environment, but automotive segment declined 10%. What brokerage is that? Hey, yeah, William, it's in the link tree in my bio, that very first link there. Broker called Moomoo. Solar and semiconductor investment is expand. Yeah, so check this out right here. This is their main growth driver. Their optical communications. Check this out. It's at a record, or pretty much it's up 33% after it grew 35. So that's growing nicely. Looks like, what's their display revenue doing? Display revenue, look at that. That's actually down 7.5. And their specialty materials is up 13. Automotive up 5. So anyway, it's like a mixed bag here. But their profits, you really look at the operating profit here because they had a little one-time adjustment on the comps. So the revenue's up 20, but the profits are up by 95. They've really expanded their margins. Let's see. Gross margins are up by 10. Net margins are the record. So yeah, Corning's interesting. But my pick is actually Amphenol as maybe a safer, just more high quality play. But it might not grow as much. I don't know. Actually, if we compare the two stocks on top of each other versus overlay, let's pull this up just so I can show you how. Oh my goodness, bro, no. GLW. All right. Oh, Palette, we'll look at a few more. Yeah, hey, JD stock isn't good. We already looked at them a few times or 2 times. Nothing, not one I'd own, rather on Amazon. Nothing special about the Chinese retailers. Like there's certain ETFs out there that go out of their way to not, they own the Chinese tech stocks, excluding JD and all the Chinese retailers because they're just not like good. But yeah, here's Amphenol versus GLW. We can see how they kind of trend or follow each other, trend the same direction. Let's see here. We'll look at 1 or 2 more, then I got to run, sadly. Google, you know what up, Cass? We have actually not looked at Google in days, I feel like. We haven't looked at Google in so long. By the way, we stream every day if you want to hit the follow button. Waymo expands driverless highway service to multiple cities. Yeah, I think they're going into LA soon. Yeah. Waymo's already huge. I think that's like one of their small bets. Oh, wow. Someone a long time ago in the stream was mentioning this company called Turkcell, and they were up a bunch. I was wondering why. Looks like Google Cloud signs $1 billion partnership with Turkcell. It's like a European cloud company. Let's see. But let's just go look at their numbers right here. This is arguably Gemini is now, I think, better. It's like topped the results of OpenAI's ChatGPT. And like, so Google is like literally a mini ChatGPT in one, or they're worth more. But yeah, they traded a fair valuation, 27 PE. Again, the PE ratio is the price to net income plus any buybacks. But here's the Google services continue to hit a record. It's, this is YouTube, Android. They own those 2 huge assets, YouTube, Android. Then they have the Google Cloud business, which hit a record up 33%. They also just acquired Wiz. That puts them in the top 10 largest cybersecurity companies. Yeah, they own Waymo as well. They own quantum chips, TPUs. I think OpenAI is also using Google's TPUs. So they're tensor processing units. So it's so cool. Like Google's just legit an ETF and one I'm betting on for the future. I do own them. I'm totally biased, but look at these net income numbers. Like, how can you not just trust us? 25 to 35 bill of net income a quarter. So Google, like, there's like, if you judge a company off their financials, there's no other companies like with Mag 7 type financials, like with Meta's financials and Google's financials are just so good. So if you don't know the Mag 7, you just gotta, oh yeah, my bad for not getting to a firm later there, Freddie. Hey, Freddie Wap, what up, dude? So here's a firm. This is the buy now, pay later company. Let's see. A firm extends Amazon partnership through 2031, achieves profitability milestone. So yeah, if you go on Amazon, if you ever see like a checkout now with buy now, pay later or pay in 4, that's with a firm. So in the long run, if we go into a recession, this stock will get smoked. I mean, people just won't pay back those buy now, pay later loans. But the growth has been insane on a firm. Check this out. If you go to the revenue's up 33 after it grew 40, after it grew 40. So the sales growth has been insane on a firm. And not just the sales, but now they're finally profitable. They made 80 mil of after-tax net income. Yeah, that's after paying 70 mil of taxes. Like, they're now printing money, making net income every quarter. This is the best buy now, pay later. Like, what is this? Yeah, hey, SEC. Yeah, hey, by the way, this is actually a software. It's a brokerage. It's in the link tree in my bio, that very first link there. It's where you buy stocks on. They ask you for a bunch of information and stuff. But yeah. All right. All right. What up? We'll look at Palantir. Last one here. We'll do Palantir. Great company, just too high of a valuation. They're down 7% on the day. Yeah, Michael Burry actually shorted this company. The guy from The Big Short who shorted the real estate market. But check this out right here. Palantir, 400 PE, 100 times PS, which is price to sales. It's expensive. 100 times price to revenue. Oh, geez. But yeah. Yeah, watch out for the guy in chat there. I'm like the best moderator. I get the scammers out so quick. But yeah, Palantir, they traded 105 times price to sales, and this is why they also deserve a high valuation. It's justified for them to not this high of a multiple, but they definitely deserve a high multiple because look at this. If we go to their government revenue right here, it's insane. Like so many police stations use their software. The military, the Air Force, ICE, they all use Palantir. That's why a lot of people don't like them from an ethical point of view. They all use Palantir. The revenue's up 55%, after it grew 33, after it grew 12. So the growth rate is growing. And not just on the government revenue, but also the commercial side. This is the best growth. The commercial revenue is up 73% year over year. So this growth definitely deserves a high valuation, but I think it's still too high. They beat on revenue. They beat on EPS. They beat on EBITDA, obviously. Incredible net income they're making now. Oh, and a freaking monster balance sheet. You won't believe this. Literally no debt on Palantir and $6.5 billion of cash. So yeah, I have Google in retirement, but day trade it. It's good all around. Yeah, Google's a one like you want to have shares to just buy and never sell of it because they're that safe. Can you do Meta? All right, I'm getting some ask for Meta here. All right, we'll do Meta. We've already looked at let's do Meta. If you have the intention like me to never sell Meta, they're worth buying right now, right here. Like the valuation's cheap. I'm only up 15% on them. I'm not up crazy, but they're part of my portfolio because I love Meta. I've looked at their numbers. They're a great never sell company. And the only part of the reason they're gapping down so much is because of a one-time adjustment. That's like all fake. Like I love all their businesses. Like I love their new glasses. Has anyone seen the new Meta Ray-Bans, Meta Oakley glasses that has the on-set display where you can like scroll through Instagram Reels and see your WhatsApp stuff on the actual glasses. It only has Meta apps on the glasses. But if we look at this PE ratio, it's a 26. So you're trading at 26 times price to E or PE, which is price to net income. Very, very fair valuation for Mag 7. I think they're the cheapest Mag 7. Here's their daily active users. Hopefully it's not propped up on AI bots, and I don't think it is, but because their numbers are showing it. But they have 3.54 billion daily active users. Obviously they own Facebook. They own Instagram, which is huge. Has anyone heard of Threads? They just created this app about a year or two ago called Threads. It now has near the same amount of daily active users as X does. They had their first ever $50 billion revenue quarter, 51 billion revenue. Again, if we go to their net income, this is what freaked out investors. The net income fell 82% to only 2.7 billion. This includes an exact 15.9 billion one-time tax charge. So you basically add 15 billion to this. You can tell you go to the operating profit, which doesn't include the one-time adjustment. You can tell it was a record. The profits were a record, up 18%. You can also tell from the cash from operating activities, it's up 21% to 30 billion to a new record. Another thing investors aren't so happy about with Meta is how much they're spending on AI. If you go to the cash from investing activities, if they invest in buy chips or buy a company, like they just bought half of Scale AI, it shows up here as a negative number. They used to spend a reasonable $5-6 bill, $8 bill a quarter. When they were spending on the metaverse, they were upset, but now they're spending on AI. They're legit spending 20 to 25 bill a quarter on AI and chips and stuff. So they're spending a lot of money and they're questioning, are they going to get real returns on that investment? Like, will they get 7% of their money back every year on that or whatever, So anyway, that's Meta stock. Definitely worth buying on the dip. They're now introducing ads to WhatsApp. They bought WhatsApp a long time ago, and the original founder slogan was "No games, no gimmicks, no ads ever." And now there's ads on WhatsApp, or they're coming, or not on the main thing, but anywho, they're just finding new ways to monetize their apps. That's kind of what they do. They make Instagram have no ads on it, but then they just like every third post on Instagram is like an ad. So anyway, I gotta go, guys. Hope you have a great rest of your day. If you want to support me, best way to support me is just hit the follow button. And actually, this would be more than hitting than leaving a rose, just subscribe to my YouTube channel. I'm trying to build on my YouTube channel. I don't get many viewers on there. But yeah, my YouTube channel is called Nathan Roberts, also in the link tree in my bio. I make a bunch of YouTube videos. Of course, I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you, never DM you. So please watch out for people impersonating me. But yeah, I'll end this out with a quick portfolio update. That's going to be sad to do because the market is not happy today, but you should be happy if you got some extra cash on hand and you can go buy the dip because it's certainly a good day to buy the dip. If we go to our main portfolio, it looks like a little bit of a recovery right now. This is called our dividend-only portfolio, where every stock in here pays a dividend. Year to date, we're up 11%, but actually, this is still a massive increase than it was in April. In April, we were down 14%, but anyway. Only stock green is McDonald's. Looks like there's a slight recovery happening. Let's go check out the S&P. Yeah, the S&P's down 1.4, NASDAQ down 1.9. And here's what I bought today. If you're wondering, did I buy anything today? I did. Here's what I bought. 1 share of Iron Mountain, ticker symbol IRM. They're a data center REIT with a 3.5% yield. I bought like 8 shares of Webull, ticker symbol Bull, and a couple like 5 shares of CorMedix. And in this portfolio right here, this is in the top left, it's called our buy and never sell portfolio, where once I buy a stock in here, I try and never sell it. We're up 4% today. We bought a share of Amphenol stock today, ticker symbol APH. Here's how we're doing year to date. Here's how our buy and never sell strategy is doing. We're up 78% year to date. Again, in April, we were down just as bad or down worse. We were down 16% in April, but now we're up 78. That's because we didn't sell before today. That's one of my biggest regrets for a lot of stocks out there is selling a stock for a profit. Like some people, when they double their money, triple their money on a stock, they're like, let me just sell out the whole position. But that's also one of my biggest regrets for this portfolio as well. Like if we go, SoFi is a great example of that. Like Robinhood, we only have 5 shares of them left. I regret every share I've ever sold a Robinhood. You know, we sold 50 shares at 36, like way lower than where it is today. So sometimes like don't trim your flowers and plant weeds or however the saying goes. But yeah, this is our buy never sell portfolio. A lot of stocks you probably never heard of before. Actually, one fascinating thing is Coca-Cola Consolidated, kind of resilient stock at an all-time high today, up 3.2%. So that's kind of crazy on a day like today. But yeah, that's our Moomoo account. And then we have finally everyone's favorite, my Webull account. We're only up 16% all time. We've definitely underperformed. We're down 3.8% on the day. But here's all our holdings. We got AMD, Futu, SoFi, Robinhood, Reddit, a lot of risky names. I kind of don't have a rule in here. I kind of just do whatever I want. Some stocks I'll swing trade and sell out of. Some I'll just never sell. Yeah, we're down bad on some names like Axon, Sprouts, UiPath, Zoom. Some of these are just too cheap to sell. So yeah, anyway, see you later. Hope you have a great rest of your day. If you're still on the YouTube stream, it would still help me out if you drop a like. It would still help me out. But yeah, thank you to everyone on the TikTok and YouTube stream. See you later. Yeah, please drop a like for me. See you, Looney. See you, Daniel, Rowless, Mr. Phil. Oh, I forgot to look at BTM did well. I mentioned it before. Yo, my bad there, Mr. Phil. I meant to get to that one. But yeah, see you later, New York, and everyone on the YouTube stream. JVM, Lucas, I don't know who's still here. Maddie, if you're still here, thanks again. Shout out to Maddie for the 25 Ron, for the gift earlier, for the